Good morning and welcome to the Breakfast Club. My name is Darren Hancock and we are here on Tuesday, the 26th of March. Welcome all to a glorious day of being in the markets. I have to show you my new shirt today. This is the old frab helicopter. Now, how is the frab helicopter an important thing, you say? Well, let me tell you. But first, let's check to make sure that we're actually on before I give you this monumentous piece of historical data. There's Christian right through the door first. Welcome, buddy. Welcome. Well, you're the first one to hear this amazing piece of information. This here shirt, I don't know if you can all see that. It's the frab helicopter. Now, the frab helicopter was the very first helicopter to fly in North America. And it was in Homewood, Manitoba. And here's the fun part. My wife's dad, the guy who just left here, I took him to the airport yesterday, his dad was the guy who invented it, him and his two brothers. And they flew it in Homewood. We were back there for a big ceremony a couple of years ago, putting a cairn up there as a site for the first North American flight of the first untethered helicopter. And they were the ones who invented the rotating helicopter blades, but never patented it. Now you think about that. How's that? Isn't that crazy? Anyway, that's my frab helicopter. You'll find it in Winnipeg, Manitoba, in the Museum of Aviation. And through association with my lovely wife, I get to be associated with those people. See? So the frab helicopter, 1938, took its first inaugural flight. I think they got like 10 feet off the ground, untethered, and officially made the first flight in North America. And then Bell and all those other guys came out with all their fancy helicopters. But now, you know, through 2 degrees of separation, the guy who invented the first helicopter. How's that? So, with that said, and that bit of historical data out of the way, let's go crazy. Let's go have a look at the markets. It's just you and me this morning, Christian. Oh, there's 3 other people quietly sitting in the background. I see. All right, let's have a look at what's going on here. Let's go to, I'll get back to NQ like as you do. We're dipping obviously into this fair value gap here on the daily. Yesterday we dipped into it but didn't quite give us the run back that we were looking for. It's popped back up into the order block above us. We validated that one. We're back into the mean threshold of it. We've kicked off. And now we're looking for, again, a bigger dig down into this fair value gap on the daily. So I am looking for more downside prices on this. If we get through this big monster right here, we're going to get through that candle. We close below that on the mean threshold of the 15-minute chart. Then we're going to continue down. And those retail people would like to see a little head and shoulder pattern happen here, and then for us to get a further continuation on the downside. We could get a run back up into, no, I'd like to see that just carry on from here. Carry on down for downward prices for the rest of the week, or at least for Wednesday. We did get a big dig down there yesterday. We were calling for a run back into this old high, and we've got the old high, so now we've popped back up. So I'd like to see either continuation down in here to fill the rest of the fair value gap back into this order block body on the downside. For still looking for downside prices there. And we have got the rollover through the mean threshold of this up close breaker here on the US dollar index. So as that continues, we've had a full fill of this or rebalancing of that candle. We're which we were looking for yesterday. We finally got it today. So where we go from here, we're back to this order block. Kind of in limbo right now. I'd like to see further downside prices to this little imbalance that you see down here. If I stretch this out, you'll find it right there. So I'd like to see that at least dig down to 103.97-ish inside here. If we clear the other side of that, come back inside it, find some support, continue looking for this candle's high or open and this candle's mean threshold for downside prices, which will put some upside pressure on our British pound. Reprice, rebalance right here. We come back through into it. We continue to the upside. Order block, breaker, run back inside. Continue to the upside, order block, break it to the upside, validation, come back inside. Ooh, ate it all up there, but all the way back to the Sunday's open. Continue to the upside. Inside this range, we're looking for this breaker to give way. So we've come up to the mean threshold already, reacting off of that back into a CAM2 model and further continuation. So your CAM2 model, if you're entered in on the last hour, you're looking for more upside, at least into this fair value gap here and that order block up there. Look for the rejection block, and if you take out the mean threshold on a close, look for, again, this fair value gap in here and this breaker right here. Euro, we have had a nice little kickoff of that low there yesterday. And we had a nice steady run back up into this order block here. Body of the candles hit this morning. So whether or not we get a rollover and come back down here and continue pushing higher, or today we just push straight through into this low on this fair value gap above us and the mean threshold of this candle. So if the American dollar does continue down, look for upside prices in the mean threshold of that candle to give you the support you need. It's a breaker, so just watch that it provides a level of support, or if it gives way, then it's really good for upside prices. We have that low did get taken, so this breaker, we're trading back into it. Daily fair value gap on the US dollar. So we'd like to see that if the British or the American or Canadian dollar ends up getting some strength and the US dollar does continue to lose, you want to see this give up this mean threshold of the daily fair value gap and start to work its way through. Right now we're just coming back, finding some support off of it, so I'd like to see it dig deeper into this breaker. Now that we've wicked above it, we have equal highs resting above us, so if we do get a reaction off of that run, look for a run back up to take out the highs, or if we can get through the mean threshold of this candle here on a close for the day, then look for further continuation on a Wednesday and then a possible reversal. Yeah, this is where we're providing support. You want to see this provide a level of support now and continue to the upside. On the 1 hour, we got our reversal here. Body comes back into it here, and we continue to the upside. We have got consolidation, return to consolidation. If we do pop up, look for return to a CAM1 model, CAM2. And then roll over and come back down. You want to see this order block provide a level of support. It will end up being a breaker because we take out this low. So if you come back, find some support of this on the hourly. Mean threshold, CAM2, continuation on the downside, run for these lows or this fair value gap below price here. So we're digging back deeper into the daily fair value gap. We've got to roll off that breaker on the New Zealand dollar. Back up into order block, fair value gap, rollover, continuation on the downside. Unless the American dollar loses strength, we should see this bottom out in here off this order block's mean threshold, and then start looking for this order block above you here. Get back up on top of the breaker, get through the mean threshold of this candle, and then start pushing for higher prices. Pull your fib tool from high to low and look at your ranges in between here. If we get above this fair value gap right here on a close. This is a positive sign for a run back up into this area. So pull your fib tool on the large range and scale out according to your fib tool or whatever method you guys use to trade your ranges, your internal range liquidity. On Australian dollar, we've got a bounce off of the inversion. Lovely, lovely yesterday. We're back into that range. Look at the fair value gap here. Again, if we get above this, look for this as a real good positive sign. But not super positive because we would like to have seen that low get taken out. And we're right back into here. So it's a pretty tight range on the daily. It's a tight range on the daily. So if we get above this, look for a run back up into this level, this fair value gap above you here. So you can catch yourself a nice day or two of straight upward run on Australian dollar if we get above this close right here on a close for today. If you do, anywhere inside here that you reach for to go higher would be your would be lovely. Ideally, put your entry in down here, or you could put an entry. Not you should. I'm not giving you advice, but you could put your entry in right here and use the fail safe that I taught on the weekend as your means to protect your investment. I'm starting to believe that no trader should be without having a fail-safe in their trade. I think it's been proven so many times already, and I don't know how many times my audience has tried it or has seen it, whether or not you guys like the idea. But the more I see them, the more I see how effective it can be, the more I realize that it should be an integral part of everybody's trade plan is a fail-safe. Stop losses for catastrophic loss of direction, but the fail-safe should always protect you long before your stop loss. Now, there are obviously rare situations where it will take you out right away. Hence the reason you have maximum 1% or 2% of your equity that you risk. But you should never, most of the time, you should, and we're talking greater than 90% of the time, you should not get your fail-safe or your stop loss taken. Your fail-safe should save you a significant amount of your stop loss, because the fail-safe would tell you you're on the wrong side of the market. US dollar, here we go. US dollar, Japanese yen, we're still looking for that weekly high. We're kind of sitting in that limbo again. If we come back up, provide a level of support, retail's going to look at this as a ceiling that's dying to get busted out of. Like we're going to drive some liquidity up into here, a quick snap up into there, clean out all that liquidity above the weekly highs, and then pull back into this range. If the American dollar does continue to let go, this once again will be a level of the highs that has not been broken on the weekly yet. We pull back into this range. We do have a lovely cam model here where we drove all the way through it, came back inside a cam model 2 off this inversion, run for that high. You would have taken it out 2 days ago on Friday. It would have been a lovely little model right there. Let's look at oil. Oil's in a really interesting place right now. Oil's looking for this inversion right here. You don't want to see this close. It did close above. Come back, find support, wait. This could be a reversal coming back down into this range here now. Keep your eye on this level. Make this bigger so I can see it. If you're trading oil, keep your eyes right here. See how we've traded above it already? That looks like more upside prices to me. So we're going to take out this rejection block and go higher. If we roll over and come below it, close below it today, look for tomorrow to reverse into it, and then continuation on the downside and back into here. If not, this is more bullish. I see oil going up higher. So if you're in oil, I'm bullish in oil. Consolidation, run back right inside. There's a cam model too. You may even get out if you're using the fail safe, but if you look at that fair value gap sitting right there and that little gap, it sits right on it. So beautiful little return. Stop loss would be sitting here. You're getting a nice little squeeze, but boy, you'd be off to the races right now. Going higher. Gold. Some of you are just sitting there chomping at the bit waiting for gold to do something. And we are in its consolidation side to side. We've just hit the rejection block right here. It's a big wick. So if you lose more than 50% of this wick on a close, look for further upside prices and look for this high to get taken out. Pull your quarters into the wick. And if you remain at 25%, and we pull back off of that and close below it, it's a sign of weakness. We should see it run back down into the rejection block. We're back into this consolidation again on the daily. We've hit the rejection block here. Again, I can't stress enough about how you should pay yourself at rejection blocks, not old highs, because you don't always get your old high. But you will get your rejection block, or at least the breaker. Yeah, we're back up into this order block. We just broke down below it, came back up inside it. We're tapping off of it, also tapping off of this inversion here. That's always a good sign. We tap. Now you want to see it continue running back down. And now we're on the opposite side of this. You want to see this continue on the downside. Take out this order block. You're between this candle here and this candle here on silver. So look for more downside. If you lose the breaker, or the mean threshold of this candle right here on the upside, and we get on top of this inversion again, look for further upside. Right now, I'm bearish in silver. Copper continuing down as we suspected. We're looking for it to return back into these old highs right here. We still got a few more little bumps today. We should start making our way down into copper. So we called copper yesterday coming down, so it went up, come back down, and here we are sitting kind of flat and looking for a return back into here and the close of that fair value gap. Palladium. We're expecting palladium to get back to these old highs here. Yesterday we're keyed off the old high. I'd like to see that get right back in here and close here. So if we get one more little drop down, look for a fill into this and a back into that little tiny 3 candles right here. They look a lot bigger when I move them up. Look for a run back into that candle, which is a breaker. Hit off of it. We're expecting our run back up. Clean this out and start running back up into the higher prices. So I expect this to hit here and then start climbing back into here. This will be your key level later on to find out whether or not that's going to continue to the upside in palladium. So people are like, why are you in palladium? Who cares? Banks, CGS, Bitcoin. If you're into Bitcoin, on a 1-minute chart, Bitcoin is just broke this swing point here. If we do get a return back into this area here, take the full fair value gap all the way down. Stop loss would go here. Even this inversion, you could keep it really tight. Stop loss goes here. If it does come back and take you out, your stop loss will be really tight, and you're aiming for up here on this one. You're already there. I think you've already hit this rejection block here. So I expect a really big deep discount for this. So if it comes back into here, you could look for, it's not super clean. Forget it. I'm not going to give you anything that's not really clean. I'm just trying to form fit something for you. And that's not a super clean entry. So I got nothing on Bitcoin right now on a 1-minute chart anyway. What do we got? Soybeans. If you're into commodities, my friends. Commodities. I'd like to see this return back into this area right here, back into these old highs to continue to the upside. if you lose 1160, if you lose that on the downside, then then I would suspect, oh actually no, if you lose this right here on the downside and you come back into it, look for a run back into the discount array inside this range here for soybeans. Off the order block, you got to get below this level right here, get below this order block, come back up into it to get low into this. If you get a trade below here with a body close below this, come back in. Corn, go short. I see short there. I'm already long in sugar. I'd go long in sugar. Coffee is nothing in coffee. Live cattle's nothing right now. Coca. Did we call Coca up yesterday? Guess it's still running. Lumber. Got nothing in lumber right now. Got nothing in lean hogs yet. The indication in lean hogs is that if we give up this order block here on the downside on a close for the day, we're looking for another return back into this high of that candle, and then eventually dig back into that gap below you. But other than that, my friends, here we are back in the NASDAQ for the day. What do we got? 46 people. I turned my back, Christian, and look at all the people that turned up. Was it something we said? Was it something we said? Good morning, David. Russell, good morning. Kitty is on her way too. Wow, Kitty. We're looking forward to seeing Kitty when she arrives. Oh, here she is down there. Okay. Paul. Welcome, Paul. Good morning. Thomas. Harry. TP, good morning. Oh, are you able to adjust the volume up? Thank you. Sorry, I had my mic back a little too far. That should be a little better. Good morning, everyone. Lewis, Kitty, good morning. Lobo del Cash. Sup, homie? Richelieu, my Russian friend, how are you? Lewis, welcome from South Africa. Mohammed in Germany, welcome. MBX, love the stream. The volume is somewhat low. The volume is low. It's better now, I bet. Mr. T, good morning. How are you doing, buddy? Lambo. And Team Theta. Thomas, love the fact you give every asset your observation and help everyone out. Thanks, Darren. You're welcome, Thomas. You're welcome. You got to take them with a grain of salt because I am kind of blasting through them real quick. I'm not giving them a ton of analysis. I'm kind of giving them quick, so you got to take that with a grain of salt. Sitting right at the weekly open, Fernando. Good morning. Edgar Allan Poe. Something I just wanted to call you Edgar Allan Poe there for a moment. The poet has arrived. Good morning, everyone. Well, 47 people. Welcome, welcome. We're up to 564 people. Man, just last week, we were just getting ready to break. Yeah, we just broke 500 last week. We're 64 people up already. Hot diggity dang. Gotta love that. What's our... Oh, look at that. You see this right here? Swing above the high. There's your swing point. Body trades below the swing point. Then we come, boof, literally gapped up to the swing point right there and continue down. If you're looking for a quick 2-minute make on money in Bitcoin, right there. You just literally got it right there. It's New York Open time. We just made it in time. Where are we going? Says the algo. Now, we shouldn't be looking back from this day, from that moment. Notice how we wandered around on that? Came back up one more time. I don't want to see this. I don't want to see us blow through here again. I want to see this just exit stage right. Heavens to Murgatroyd. You all remember Snagglepuss? You probably don't. Back in the day. Jurgil, good morning. Pumex, welcome. We're just sitting here watching candles this morning, smelling the scented candles that are the NASDAQ. Did you all get my famous piece of history this morning? That's my famous piece of history. The frab helicopter. I just want you all to know. That was the guy I took to the airport yesterday. It was his dad who invented the first helicopter in North America, my friends. Check it out. Check your history books. North America, Winnipeg, Homewood, Manitoba. Her dad's dad and a couple of his brothers invented the first helicopter that actually was hovering. And they got a cairns out there. We had a big ceremony. It was quite fun. Stars landed. It was a big ceremonial event. It was quite nice. But Carla's grandfather was one of the inventors of the very first helicopter in North America. Some might think it was Bell or something like, nope. Homewood, and the first counter-rotating helicopter blades, and they never patented it. Can you believe that? Those guys would have been loaded by now. Well, they're gone, but yeah. And that is a little bit of history for you folks. Chris Alley, good morning. Okie dokie. See a nice little run on liquidity for a continuation on the downside. That's what I'd like to see. I'm marrying the idea. I keep saying it to myself, like I have to marry the idea that I want to go lower. Niv Trader, good morning. Julian, good morning. Do I see the higher time frames on? Did you see the higher time frames on NQ? I am staring right at them. We got to get below here. Ideally, we have a body breaking down through mean. We have reprice, rebalance. We break through it, come back inside it. I'd like to see this continue through. We've got to break through this guy and that breaker. If we get through the breaker on the downside, I'm very happy to see this continue on running for deeper discount inside a larger range. I'm looking for a like array to like array, so I'd like to see this really get down into this inversion or swing inversion here, and then start really pushing for lower prices. If we can get through this on the downside, I see a plummet. A plummet. Lots of other PD arrays got to happen long before that, though. So right now, it's kind of moving against us. Look at that high right there, which is the fill of this fair value gap, I would imagine. We could run up it a little higher into that order block above us. Don't always jump on this and go, oh, we're going long. There's your inversion, there's your swing, the body breaks above it, you trade back inside it, and then all of a sudden, whammo, it takes you out. So, false swing. Or you just got fully slammed on that. So if you entered in here, and it came right through, took you out, and still closed above you, and then went higher. Here's that situation that I was talking about with your fail-safe, where your fail-safe, if it just rips through you like that, there's your 1% taken. That's a full loss. Nothing you could have done about that. You would have entered in right on that candle as it came back here. It would have come through and gone 1, 2, 3, would have grabbed all of you, and then went straight through and took out your stop loss. Instantly came back and then went higher. That would be a frustrating entry for those who actually took that as a loan. But hey, how often have we seen that happen? That's the first time in a long time we've seen that happen. And it happens. Price of doing business, man. And do you want to trade right on 9 o'clock or 9:30 open? Give it a moment or two. Back up into the breaker. React off of it. Back up into this area. Fill it in. Now I don't want to see it close above here. We got 25 more minutes. I don't want to see it close above that. It's wicked up in here. Fill that. Rebalance this candle here, and now I want to see it just kind of slowly roll over and come back through. If this runs up higher, let's say it takes through here. Let's do another scenario here. If we trade above so CAM model 1, so you've got this consolidation, price leg that takes out the consolidation. CAM model 1 from there all the way down to your bodies. CAM model 2 all the way back into this order block here. CAM model 3 is 50% of that leg that takes that out. So here's your 1, 2, and 3 all the way back into here to go higher. So that fair value gap there needs to come back, get filled for your CAM model 1. Look for rejection block and an old high, rejection block and an old high as scale out points. Don't forget to move your stop loss accordingly. That's why you don't trade opens. Smart move, man. You wait for the whipsaw to finish up. Wait for the whipsaw. Mohammed said I took a low when I took that low going long when that low got taken. Did a little turtle soup there. Good for you, Mohammed. Did you pay yourself? There's your CAM 1 coming up. I want to get a nice little discount in here, so I think I will take a CAM Model 2. Or did I miss a CAM Model 2? Depends where you pull your fib tool from. Yep, that's CAM Model 2 right there, 50%. So 1 takes it. This is the swing point above the high. So look at this as a swing. You want to see that stay open, roll over, and come back down. So pay yourself with your CAM model because you see that little gap sitting right there. This could be a swing point for a continuation on the downside, which is what I'm kind of hoping for. And you're really between this swing and this swing. So this one takes the high, this one takes the low. So if you close above this point right here on a close, so if you're going short right there, watch for a I'm going to do it anyway. And I'm going to do it because I can't keep telling you guys to do it or what I like and then just not take something. So now I'm going to slam this up against here. I don't want to see it revisit that. I'm in a bit low on that, so I think I'm just going to move to break even. And I want to see this come into the first order block, which it's already taken, so let's take me out. If I can get back up into there. Ugh, it put me back in again. Did I just go long? Sorry. I'm used to buy and sell on MT4. I'm going to wait. Now, the fail-safe is what you're looking for here. If this fails here, well, let's do a fail-safe. What the hell? So if this fails, here's where you use your fail-safe. No, I don't want to see it come back up there again. That's done. There's no reason it should revisit that. It's back into that order block. You start paying yourself a little piece right there. There's only one, so now I'm going to move my stop loss to break even and move some profits. You pay yourself a piece here, pay yourself a piece here. It's $200 in 1 minute. How many of you have been paid $200 in a minute? You gotta take it first, Aaron, if you wanted $200. Quick little run into the range. I'm expecting further downside prices on this. So now I'm gonna come back up here and I'm gonna put another order in right here. This is where you get to use multiple. This is building your buffer for your stop loss above you. So you made $200. So right there, it's a free trade. We're inside this range right here, so you take your percentage. So this should bring us back above premium and run us back down into discount. So I'd like to see that come up one more time, give me an opportunity to get in short here, run for this guy here. If I don't get it, then that's okay too. If you don't like that trading that fast, then and you don't recognize that range that you're in and that there's a discount array below you that you should be scaling yourself out at, then don't worry about it. That's not it's not your trading style, so don't sweat it, right? So again, we're looking for this if we get a candle close above us or take us out. Order block here. Wait for the next candle. Got 46 seconds. Now this is where you're going to see this reversal. 12. It's going to hit that rejection block, turn around and come right back down. Look at that. one that ran through me. So free trade. So look for here this to continue to the upside now. We've broken this. We broke this to the upside. I didn't want this rejection block to hit. I didn't even want this breaker or this order block to get hit, but it ran all the way through it. That's why my stop loss was here instead of up there. So now we're looking at this here. You're kind of stuck between this one here and whatever forms here, because now we've haven't quite taken out that high. We're back in a consolidated market, so we have this last down close candle here, a little fair value gap sitting below you, and we're looking at 10 o'clock. So right now we're pretty much break even. I'm going to start trying to take more trades, so you guys, instead of me just pointing them out, I'm going to start taking them just to show you, because I think some people want to see the trade instead of me just talking about the trade all the time. So look here, watch that. I'm a little bullish now. Mr. T, short NQ, Darren, 15 contracts. From where you measure the consolidation. I like to look at the consolidation from this low to that high. You may look at it and say, I want that consolidation from there, those equal lows, to that high. Whatever you prefer is your consolidation. It's whatever model. You may even just choose this right here as a consolidation before it breaks out. I don't know, whatever works for you. Though that's the thing about consolidations, because they're not consistent. If they were perfectly flat, there's no problem with it. But when you get these little slightly amorphic kind of consolidations, the decision is, where do you pick your range? Well, I like to pick that until I actually see an impulse leg break through that. I will continue to take all of that as it kind of, even if it runs up a little bit, I will take that whole range and I'll use that. But when you got a nice flat one like this with a displacement leg like that down, then I say that's my consolidation right there, and it breaks below it, then I'm happy with that as being my CAM model 1, 2, and that's the displacement leg that you return to go higher. And then you're aiming for these first objectives. So if you did catch the CAM model 2 here, you're aiming for your first objective here, second objective, move your stop loss to break even, and you're waiting. And again, CAM model is something that will be personal to you, and you'll decide for yourself whether or not you like a specific consolidation. You may not trade a CAM model until you see a specific tighter consolidation flat like that, and not the bent up ones or the bent down ones. You want to see something that's relatively tight like that. Then you'll go, okay, now I've got my CAM model. There's clearly a displacement leg down for manipulation, and then the run back up, come back down to it, and then the continuation. So when you see that kind of run up back down into your CAM model 1, CAM model 2, and then there's CAM model 3 down here, which you didn't get, run for that rejection block. Always pay yourself at rejection blocks. So you got from 66 to 80, so you got 21 handles just in that run there. And it's right off of a Sunday's open as well. Break even as well, risk removed, entry, stop, break even. Yeah, I like shorts, not chasing, long bias. Is market waiting for news? Good morning, Tristan. Yeah, it could be waiting for the news. Look at that, we came all the way back and filled that fair value gap on the hourly. Right to the money. and we're right back up to that order block. So it's done its damage inside this one candle. It's come all the way back to the order block, filled the fair value gap. So now it's in a premium of this range, and now you want to see this premium give up and start really working back down into this breaker here. If not, we have this is a breaker. Here's your swing point, last up close candle before a run below these lows. That breaker is holding price. You see that? We're kicking off of it. We came back to it. Here's the ideal one where your body breaks above it right here and you come back, tap it. That's a retest of the breaker, and then you run for mean threshold and rejection block. You don't even get rejection block this time before it comes back and retests it. So did you take out money here? If not, you're actually underwater where you entered, and you're frustrated because you give away all that money. And did you pay yourself above this old rejection block right here? Did you take money at the high, which is also the mean threshold? Did you pay yourself at these points, or were you reaching for up here and you missed it? Now you've lost all that profit for the last 4 hours or more, 5 hours. 1, 2, 3, 4, 5. So you're getting on 6 hours now, and you're all the way back, and you're frustrated because you didn't reach the high, but you didn't pay yourself at the rejection high mean threshold. They're PD arrays, man. If you overshoot, this was a lesson that we were talking about yesterday, that if you overshoot your PD arrays and you ignore the ones that are in low-hanging fruit, and you climb the tree trying to get the highest fruit, and the branch snaps and you come down, passing all the fruit on the way down, it's too late. Too late after the fact. Do you love my metaphor? Climb the tree, the branch snaps. Ooh. Ooh. Did you see this in Bitcoin? See that inversion, that swing point right there? Take that high out, swing point. We get short there. This whole piece has never been revisited. Look at that, a huge run from inversion. I don't see any little retracement. Here's a reprice rebalance. I guess you could see this one here. Start back up. You could get into it long here. Your trick going from like array to like array, discount array to premium array. You go all the way back up. You hit it. You get short right there again now. You have your next entrance. Look at that. You just closed right below it right here. The high on this candle is 70,720, and the low or the close on this candle 72.18. So this one just closed below that. That's a close. So you open up inside it, you go short, and now you're shorting for the next run down into the either this PD array down here we talked about. So you're looking for a discount array. So pull your fib tool from here and start scaling out on your array on the way down. Don't forget 1%'s up here, and if this whole range here, which is now your level of support that you can get your trades in on, if you want the best one for break even, right here. If you're entering short there, if it breaks up above you, comes back, taps you, get out. That one's definitely guaranteeing you the reversal above these highs. And just be careful, because as you're working between this one and this big one here, or this right price imbalance down here, or reprice rebalance down here, look for this next potential leg up. So watch as you run down into that range now from low to high. Pull your fib tool here and look for 50%, which would be right there. Pay yourself right here, because it's a swing point. Pay yourself there. Move your stop loss to break even. And then scale out, and keep moving your stop loss down. Again, if you're using the fib tool method, if you have your own method, that's fine. And the fact that that's just coming into this gap bothers me. So I would pull my fib or my stop loss right into break even right now. I don't like the way it's banging off of this. Protect. If you're wherever you're in doubt, bring your stop loss to break even and wait. If it works, it'll just keep driving down. If it doesn't, and comes ripping all the way back through you, reset and take a higher one for a long or a short, I should say. Boy, how's you like your cheese? I like it grated, please. Look at how it's banging around off Sunday's open. Okay. Studied fibs over the weekend and rewatched a few of your sessions. I think I get it now. I've done 3,200 in 2 days, including today, trading one contract. Holy cow. You've made 3,200 bucks, Chris? That is awesome. And if I got to help out in any way, shape, or form, that's even more awesomer too. I love that feeling. So congratulations, Chris. Good work, man. Put the time in, you see the logic in it, and it can pay you dividends, folks. It can pay you dividends. Be patient. It looks like this is crazy chop right now. This is like cheese grater. Welcome to high resistance liquidity runs. You don't even bother playing in this. Don't even bother. Yes, we can read it, and if you really want me to, I'll read it for you, but really it's a cheese grater right now, and it's not like you'd actually enter into a trade inside here. You're really stuck between this candle, this big candle here, and that candle right there. They're literally overlapping themselves, banging back and forth between those same arrays over and over. It has to extend, and it has to start reaching up into the rejection block. Take out these little highs here. They're all, the bodies have been stopped right here. So you got these wicks that run up into, you know, this candle and that candle. They're overlapping. So eventually this is going to say, I got to get out of here. I got to start reaching for higher. I got to extend the range higher and create this to be the breaker. I got to start pushing up above this high, creating a breaker here, turning this into a senior candle. Or I just keep banging around on these arrays, go to the rejection block, peel around, come back to the rejection block on this side, and just keep tapping inside this range and playing inside these candles, marking time, waiting for either a news event or for something to inject some liquidity into the market. Those of you who are cam model traders, you're just chomping at the bit waiting for this thing to bust out somewhere. What's your overall bias? Look for your bias up on the higher time frames. That will help decide whether or not this is going to be a bust out to the downside and that you're not going to be on the wrong side of that and go down, or that's a price leg displacement manipulation for a run back up. And usually your manipulations happen in the first half hour or so. 10 o'clock, looking for your silver bullet entry coming up. Just so you know that that one worked out for you. just so you know that when we slam that to break even, it gap down, and it's come back into that imbalance I was telling you guys about right there. Bing, perfect. So range to range. You just made thousands of dollars in that. That's a couple of grand easily on 4 or 5 contracts. That's easily 5-6 grand right there. Just in 1, 2, 3, 4, 5 minutes. $1,000 a minute. You guys want that? We got news at 10. That's why you're sitting still. Let 10 o'clock run out the highs. Create our false run up into 10 o'clock, then slam it down. The volume is low. I like the simplicity of your explanations, Darren. Thanks, Kitty. Thank you. Do I need to turn up the volume a bit more? Stand by. You're going to regret this. How's that? Is that better? You're going to hear more background noise. When I turn it up, I can crank it up really good right like that. Is that really too loud now? That's maxed out. That's the best I can give you. I can see that's like 40. Yeah, that's the background noises at minus 45. Well, that's quite a lot. Let me know what you guys think. If that volume is too high, then I will turn it down. If you got too much background noise, I can give it a little tweak like that. Not much difference. Anyway, you guys let me know whether or not the volume is good enough for you. So there's the run into 10 o'clock. Is this a false run? Are we running higher? Are we losing this order block here? Mean threshold once again. Stop losses here. The reversal going long is there. The reversal going short is there. Back and forth, back and forth. We've got a breaker now. I got nothing. I got nothing for you. Unless you look at this guy here. Volume up is much better, he says. All right. What broker do you use to take such small range plays? The spread would rinse me on my current broker. Yes, yes, Firgal. That is the biggest problem, especially with MT4, MT5. You just get hammered. These small little runs. And don't forget, the small little runs that I'm doing, you have to decide whether or not that's liquidity that you really want to play with. You may just go, look, man, that is a high resistance liquidity run right there. You wouldn't even be playing in that. I'm just trying to show you that there's a logical levels that algorithm is running to, even inside all that mess there. See you back to the breaker. We found our support off the breaker. That's another classic entry pattern right there. And back to your CAM model 1. All in one candle. Did you literally take that small in one candle back to your breaker? One entry, CAM model 1 entry. As soon as it whipped up to here, you pay yourself there, move to break even and wait. Like, get yourself into stress-free trading as soon as you can. You make a small little couple of bucks there, 50 bucks, whatever. 50 bucks better in your pocket than someone else's, man. And then wait. Now you go to a stress-free trade and you get to see if this continues to run higher. If it comes back and takes you out, take your 50 bucks, fold it up, stick it in your pocket, and wait. Unfortunately, this is TradingView, so this is live data. This is no different than it's on a demo, but I'm paying for live data. So what you're getting is no different than what anybody would get on a live trade. You'll see the spread up here is 0.25 to 0.5. That's unbelievable when you compare it to MT5. MT5 is all over the place. Oh, by the way, that trade we were talking about over here, really paying you dividends now. So find a broker, and there's a ton of them on here that you can connect with and run them through TradingView and have the exact same setup, data, all that stuff here. Your entries would be exactly the same as they are on here. Nothing would be different because you're getting your feed from these guys. Whereas your MT4, MT5 brokers, they're like this, up and down, but you see their spreads are moving constantly like this all the time, and you'll see them suddenly open up and gap up and take you out. I did a diagram here once where the candles were doing this. My stop was right here, or let's say it was right here. This didn't even come near me, and yet it took me out up here on an MT5 chart. We were nowhere near that. They opened up the spread so big, they went through my stop loss and took me out way above here. And yet the candles never reached that spot. And I took a picture of it just to show people that's how corrupt those little jerkos can be. They can just open their spread up and snap you out of a trade. It was frustrating. So I hate MT4, MT5. This one seems to be better regulated on TradingView. You don't see these guys gunning for your stops because they're running through a different platform. So I could be wrong. I'm still trading on I've got a funded account on MT5 still, so I'm only going to do it a little while longer. Then I'm going to find. I still haven't found. I'm lazy. I haven't found one on TradingView that I use. So I'm paying for data that I'm just sharing with you guys for a live feed. And I have nothing on there. Like I don't have Top Step or Apex or Axel or whatever the heck they're called. I haven't really done a lot of research into it. Another funded account. I'm still playing with that MT4 one. Sorry, MT5 one. Hopefully that answers your question, Fergal. 10 a.m. 10:04, swing, take out a high. What I would like to see is this, close below here, come back up inside, take out that breaker, come back up inside here, and then continue down for a swing. And did you pay yourself at Bitcoin? Look at that. Did you pay yourself at the rejection block? Have I emphasized the damn rejection block enough to you guys? Pay yourself at rejection blocks, because if you're aiming for the low and you didn't get it and it just ripped all the way back and you're now underwater because you did not pay yourself at reversal to reversal, did you pay yourself here? Did you pay yourself at that breaker down there? At the high, at the consequent encroachment? Did you pay yourself here? Because if you didn't and you got greedy and waited for that, you just lost all those profits. Now it's come all the way back to your entrance, which is right here, where we're calling it, and our stop loss that was sitting right there. You've lost all of that, and it's come back here and put pressure on you now. Such a waste of some thousands of dollars. Thousands of dollars. Anyway. So we're still getting support off this breaker. Once again, pushing higher. Mean threshold of that candle gives way. We're into rejection block again. Didn't take the high out. Mean threshold is holding price. Wicks just do the damage. Waiting for this breaker to get hammered through. Again, I'm still married to the idea of wanting to go short. But what do you know? What do we know? The volume's good. US CB consumer confidence actual 1.47 forecast is 107. Previous is 1.6. Actual is 1.4. Ooh, that's bad. Is that not bad for the economy? Isn't that supposed to crash it? We're expecting the American dollar to go down today. What's it doing? Well, it's coming down. Not quite as crappy as we thought, though, hey? What was this? Wow. Well, it's not doing it's not reacting overtly crazy. There's a swing point right here. You see how that body trades below it here, trade back up inside it right there, and then scale out profits all the way down right inside here. Not that you'd be trading the dollar index, but you know, if you If you're looking for swing patterns, that's what you should be looking for. Now it's telling me, my little alarms are telling me check out. That's a silver bullet entry for a long. If you're going to go long off the breaker. Now we've come all, so see how we've come through to the meat of the breaker, midpoint, all the way to the bottom of it now. You want to see that really start to eat through there right now. And this becomes an area of interest. Like I just showed you there on the Dixie, this thing, that becomes this thing that we're looking at right here. Right there. Taking out some highs. Good opportunity to go low. Pop through here. Close this off. Yes. Yes, my friends. Did you see that? Did you see that, my friends? Those who thought that was the silver bullet long are going, crap. I just got my ass handed to me because I bought into the idea that this was not a manipulation, was not a Judas swing into 10 o'clock to take out some highs and then the reversal. So this is not your CAM model. It's a wait. If you do take the CAM model 1, that's why you've got to be out super quick. Because if you're wrong and she trades back against you, you're into full CAM model 2 right there. Your stop loss is sitting down in here. If that closes below that mean threshold of that candle, use your fail safe to get yourself out before you get your stop taken, unless it just goes book and runs right through you. Now pull your fib tool from high to low and start scaling out at 50% on the way up. Because if this rolls over and comes back down again, you're going to wish you paid yourself inside this range. If you got a CAM 2 in there nicely, I'd slam that sucker right up against break even right now. And I'd pay myself right at that breaker's high. I'd take a huge chunk off there and I'd start moving my stop loss into profit. Right there. Because that can just roll over here now and come back down and you'll be like, dang. Look at your fib tool from that. Did you pay yourself at 50%? Did you pay yourself at 62%? It's not there yet. So you better pay yourself at 50, move yourself to break even, then let it turn it into zero stress trade. You just put 50 bucks in your pocket off of a CAM 2 model. Notice this inversion we were talking about right there. Look at that. Bing, hit it perfectly. Now expecting this to just tear down. Come on down. Let's take it if it comes back up one more time. Sell it. And then we'll put another one up here and we'll sell that one. Sell that. So one's going to take a hit for sure if we go through here with a body and close back on top of it. Then that one will take a hit. That one will be hopefully break even. Fail safes in here. See, it's right up to the top of the breaker. Just trip me in there. Your second one, if you had a second spot, would have been tripped in by now. And that's what you're risking. And if it okay, so now what we're looking for is, does this close above here now, or do we finally get a reaction off of this and start driving back down? Now, how you build your fair safe from here, you may want your wiggle room would be this order block here. It might be that order block up there. It might be your rejection block. I don't know. Whatever you decide to trade. So for me, as soon as I get below this fair value gap right now, I want to see this one. I don't want to see a body trade above. See, now right there, I'm going to go to right here. I do not want to see that high get taken again, because if it does, on a close, look, we're already closed above this swing point here. So I don't like that for, it's probably best to just go in your sidelines right here. Man, you better start doing something, get out of here, because I don't want that getting any lower than that. I'm going to move right near break even. Just because we're trading just above this swing point, even though it's not above, or I guess it is a swing. Let's give ourselves some money. We'll put a couple of bucks in there in our pocket, $20. I'll take Derek out for a coffee. That's fine. Take my 20 bucks. We traded above it, you see. That's why I don't like that idea. Even though it's just, it came back down. I don't like that idea it traded above, so that's why I got out. I wanted to nibble a couple of bucks out of that because that's my rule. If it trades above this, then all of a sudden that becomes support, and I'm really between here and here, right? So I'm stuck between those two. I'm going to wait. It probably is going to roll over and come back down. I'll probably get a little paranoid there, but whatever. I'm going to wait. Even though this isn't, this I guess is technically a swing below these lows. If that finds support, that can go up higher. We've already taken out the highs, so my guess is this is going to go lower. But I don't want to guess. I want something that's clean, and that's not a super clean one right now. It's nice, that breaker. You're only hitting the meat. See how we've come back, hit the upside half, and now we've come back and we're really grilling the downside half. But all the time I see this right here, I don't like that, so I'm gonna wait. Too choppy. Too choppy. I am paying for live data, so it's live account. Brilliant. I love it. Kitty, what are you playing? Which broker are you using through TradingView, if you don't mind me asking? And if you don't want to mention it, that's fine. I respect that. Good morning, Dave. Julian, ThetaWaveTrader. Yeah. Prop firms typically offer tighter spreads, right? I'm thinking of taking on a prop firm challenge and move away from a trading personal capital. You know what? For me, the prop firm, just my belief, the prop firm is a segue between demo people and live people who trade their own cash, and we used to put it all on the line. It's a perfect segue, because you say, I'll pay $50 for a $5,000 account, for example, for one particular company I went with. I'm not crazy about it because they're on MT4, MT5. So you pay $50, so you've got a little bit of skin in the game. And it still feels like a demo because you still have to pass the challenge. But if you make money, now all of a sudden it's like, wait a second, I get to leverage somebody else's money. I get to make 80% of whatever I make now. You get to slowly say, my overall risk is $50, but now I'm more motivated to make some cash. Now there's a potential that I could seriously leverage their $50 or $5,000 or whatever their account is, to make myself some money. And all I ever put at risk was $50. And if you've already passed the challenge, they give you your $50 back. So now it's zero risk. Now it's not like a demo account anymore. This is like live money. You could make money off of this. So it's kind of that transitional psychological idea. I love that. It's like somebody found a perfect place to put a transition point between those people who are getting so comfortable with demo account, but they're still afraid to put their own live money on there. So you got that perfect middle place. That's how I kind of look at prop firms right now. If they're reputable and they actually follow through with what they tell you and they actually pay you like they're supposed to. So here's that example. See how we traded above it right here, and I got out because I didn't like that. Follow your rule, stick with your rule, and wait for a better setup. Don't force your rule. Bend it to the will of the markets, because it just would have come all the way back up here, and I would have been, instead of me taking that 20 bucks and taking Derek out for a coffee, I end up losing that. I'd be underwater right now, because now I'm bullish, right? Because I traded through here, above, on top of it. Now I'm going higher, looking for this rejection block above me here. Sorry, mean threshold here, the rejection block once again, and then the equal highs. And then you're looking up for this big pool of liquidity that's sitting up in this area here. That's why you follow your rules. If it doesn't look right, get out. Don't force it. ThetaWave prop firms, good morning. Mr. Derek, good morning, good morning. Love these consolidations, D. They're painful, aren't they? Mohammed, I would say March was the hardest month for me. Constantly changing ideas, choppy price actions, to be honest. It is. But you see how fun it is to try and stay on this thing, though? I love these consolidations because it's excellent opportunity for you to practice. Because if you're looking at these now and you're turning your head away from going, oh, I'm so sick of this, you're missing an opportunity to practice price action, reading price action. Like right now, you're looking and going, well, where are we? We're here and here, or in this range, we're between that candle and this candle. So here's your mean threshold. Are we going to come back? Is this going to hold price, or am I going to dip back down into this inversion again? I want to see it now blow through that inversion. Come on through. Come on down into the discount range. Derek's Discount Emporium and Delicatessen. Come on down. So you come on down into here, and then you look to a run back up into reprice, rebalance, maybe get a little short right here, and this will be your linchpin. You hear me say linchpin here and here, looking at the range you're in, whatever range. There we go. There's a discount. We come into our Delicatessen and discount range. Now I would really love to see it clean out and close below that. We got 17 seconds. Chances are it's going to be just a basic order block pop, and then you look for a run back up into higher liquidity again. So now you got to say, well, I've already cleared this one out. I've come back down. I went right through the mean threshold of that candle into this candle here. I closed out that candle right inside here. So I've got the mean threshold on that one left, and now I have to start seeking liquidity on the upside. This is a great place to practice. Don't just look at consolidation and go, I don't want to play in consolidations anymore. It's boring. It's sure it's boring, but it's teaching you something. Practice your arrays. This is a great place to practice. I don't know if I've shared this with this group for a while, but there's days where you guys are bored and you don't like trading Bitcoin, and you say like, I don't want any of that stuff. It doesn't interest me. You say, okay. By the way, here's another one of your swing points. There's another swing there. There's that little big pocket. It trades below it, comes back up inside the pocket, and drives back down. Look at another swing. Rinse and repeat right here. Oh, how delicious. Look, right even there, swing that pocket. If you just take from that candle's low to that candle's high and forget the gap, body trades below it, you're back up inside it. You're just clean inside that range, cleaning up all the way down. I tell you, Bitcoin's awesome for this. And you can practice your range. See this range you're in right now? You're between this candle and that candle up there. You have a fair value gap sitting above you, and you have a premium array above you there. So if we give this one up on the way down, even though it's just a wick, I want to see that final blow through here. We want to see this close below this level. If it doesn't, it just keeps bouncing around, creating wicks in here. mean threshold. We're stuck between this candle then and that candle's high. This one here, I guess, becomes a breaker. We have a swing point right here. So we have a body below it. Yeah, I guess that's why we're kind of bouncing off of here. We're not reaching up there. This becomes a breaker. So I want to see this breaker hold price and this give way here. This is just a regular old pawn, not really doing anything. It's an old mitigation block if you want. It got promoted to mitigation against the breaker. Senior mid-level candle. So this one should win, that one should lose. We should see further downside. Practice. It's a opportunity to practice. Oh yeah, like I was saying. So if you don't want to trade Bitcoin, right? You do this. You kind of just scroll back, close your eyes and scroll back like this and just keep pulling it back and say, all right, now I'm going to start right here and I'm going to expand my candles. I'm going to look at this range here, and down here you have a 1 click per candle. See that? 1 click per candle. And what I used to do when I practiced, when I couldn't stand being anywhere near Bitcoin, oh, here's a carrot. So what I did is I'd go, all right, what range am I in? And I would practice on the weekends when I wasn't making my multiple binders of notes that I showed you yesterday. I would take this setup and I would go, okay, this looks like another expansion down. So then I would take this and I'd say, I take these sticks, I put these little lines, I call them sticks. I just take some lines and I take a green one, a red one, and a blue one, and a couple of other ones for higher ranges that I'm aiming for. So take profits and stop losses. So the green would be my entry and I'd have multiple entries. And then I'd move the stick from the stop loss, which is the red. This is before I had a failsafe. And then I would just go, all right, now if this was my candle and I had to make a decision right now at the end of this candle, what would I do? Where would I aim? And then I put my sticks in whatever entrance and I go, okay, this looks like it's a swing point here. If I put my buy here, and a buy here because I want to go short, then that's where my buy is going to be. My stop loss will go up there. And I'll wait. And then you just go, you wait for your candle to go, and then you slowly click it forward. You go, ooh, I'm in. Woohoo! Now my stop loss goes here. Now I'm at the end of, I put my fail safe in here now. This is before I had fail safe, but this is what I would do now. And then you'd practice, say, all right, now I want to see that one start coming back down. Keep your eye on each range that you're in and say, okay, I'm in this range here. If I close above this, I'm going to close my trade out. So it's a way for you to practice each candle. Okay, so that one closed and actually ran right through me. For that example right there, it just ran right through me. So I would have taken a full loss from here to here. 1%. All right. And now you wait. You say, okay, now then I go back and I go, where did I miss the opportunity for, oh, right there. You see that? We have a swing that takes out a low, consolidation, draw it across. And this is how I practice doing my weekends when I was single. I didn't have a girlfriend. No, I'm just kidding. When you're looking for something to practice at nighttime, come in. You got a couple of minutes to practice your swing point. I took it short. I wanted to go short. I didn't see it. I was waiting for it to come back to me. I got in. I go, great. Now I'm going to go short. I missed this one right here. You see. So if I lose the trade, I go, where did I go wrong? This is not a failure of the algorithm. It was a failure of me not seeing where the turn point was. And there's the turn point. You see right there? We swung below the low, turn point, run back up through it, come back into it, tap, 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 multiple times. You get an opportunity to enter. Stop loss will go down here. And then you start running for here and here and here. Okay? So that's where that would have been. So that's how I practice. Every single day I'd be in here. When I didn't have this channel, I didn't have all that stuff, I would be doing this. Sitting here hour after hour, and I would rip through a thing, and then I'd pick an asset, some random freaking stock I didn't even know, and I would do the same thing. and I'd practice on a stock, and I'd practice on something else, and I'd just do one click at a time, and I get an opportunity to go, I have no idea what's going to happen till the end of that candle. That's where I'm going to make my decision anyway, at the end of the candle. When it closes, my decision, I make my decision right now. Now I make my next decision. Am I still good? What would I do with my stop loss? And I'd move my stop losses accordingly. And then I'd go, what would I do on the next candle? Okay, good. I'd move my stop loss to here, blah, blah, blah. And I'd practice that. Anyway, hope that helps. Gives you an idea of how to practice a little bit on the sideline. Oh my goodness, what's happened since we last looked over here? Yes, we've been waiting for this for a while now. Thank you, thank you. Choppy price. Thank you, failsafe. Lambo's loving the failsafe, are you? Good man. Good man. I took a short, closed the order block. If you guys are paying yourself now, man, you're making some ducats. This is what we've been waiting for all day. So manipulation, 10 o'clock run out. Nice. Nice, nice, nice. Hi. Johnson Geek, good morning. Terry Sullivan, my mate. How you doing, in love? How you doing? ThetaWaveTrader. I use ThetaWaveTrader. I also have Top Step account right now. Okay, you did go in Top Step. Fernando, I think the same. Can we just trade Bitcoin? LOL. Made 0.1% risking, 0.15%. Love Green Days. Pumex, good for you. Add days, quarters, and see the four. Add days, quarter, QT, and see the Q4 magic. Ye's quarterly theory. Yeah, you could use, if you're into days, that's great. I'm not into the 90-minute thing, but if this lines up, if you see the accuracy of this and it lines up with your days quarterly theory, and it helps to enhance your days quarterly theory, use it. I wouldn't totally rely on days quarterly theory, because that's relying on something that's always supposed to give me a perfect setup at a perfect time. I just said, great, use that in combination with the actual reading the algorithm. And if it lines up in the perfect time turn, take it. When you learn my time stuff, when I share more of my time stuff with you, you'll see things like 21 is a turn. 16, 17, 18, awesome time to get in on swings. 30, 32, 27. Those are all key levels. 30, 32. Here's your 2 reversing. This is where you get the bottom of the hour. This is the crazy Ivan, where you get the look back and then a continuation on the downside. It'll either look back, come through and take you out like a crazy Ivan. He sees you, right? The submarine, bottom of the hour, turns, looks back over his shoulder. Someone following him. If he sees you, it's going to take you out. It's not an ICT term. Oh, and we really need to stimulate some activity in the markets. So we beta carotene test this baby. We're expecting more downside prices, so I'll leave the carrot down here. We want to see this close here on the hour below this level. You see how this return, we body closed below this reprice rebalance. We came back all the way back up inside it right there. We did not close above it. Well, you might have closed above it. You wicked up into the order block, and now we're driving her down. So I want to see us bust through this. We went right to the breaker. See that? Right to the breakers open. Now I want to see this come back with some a gusto. A mucho gusto. And we want to see that start pushing through. Look for consolidation. CAM model revisit. Roll over, come back down. Stop loss would go just above that. There's your CAM model 1. Got back in on that inversion fair value gap once we closed back below it. Exciting, or exiting at their rejection block. Need to start trusting these setups before I can have an extra contract or two on these larger moves. Yeah. And this is a matter of just look at the price action. Don't go throwing your money at this, because if you throw money at this or you throw trades at this, your money, you tend to be focusing on over here. You're looking at that little price point. How much money have I made? How much money have I made? And you're taking off of the logical thing that you should be looking for in terms of when does price fail for me to the upside. So I don't want to see this right here fail to the upside. But look at this range that you're in and say to yourself, what is a suitable 50% reduction or return to get some liquidity? Do you want to run up to 50%, or do you want to really show that, hey, look, I'm super aggressive, I'm going to keep going? So I really want to see this consolidation hold price. That inversion, we've blown through it. This is all good. So I was going to think now we have a potential for a reversal anytime. So don't always be committed to, I'm going to go lower. Yes, we've hit the breaker right here. So yes, we have a consolidation. If we close above here, I start to get concerned that this might be a run. Then you take the run back up into the range, 50%, 62%, start scaling yourself out. We haven't closed above that yet, so that's a good sign. Carry on down. Ron, where do I find the numbers? You got a video for that? The numbers for my times? There isn't. You'd have to go back through every video I've done so far, and you'll hear me mention them every once in a while. I haven't done a video on a specific times yet. That is some serious cake, some serious fun stuff. Michael hasn't come into. He doesn't talk. He talks about time and price. I'll give you minutes where you're expecting turns happening on the minutes. And I'm not using them as much as I should. But I look at key points and I go, oh man, that's turning right at that key point. There's so many things I want to remember here. But I will make the video up for you guys and just share. I'll put all the times out there and say, look at these. Check these out. Check for time and price for up to 38. So right now, this is the Crazy Ivan I was telling you about, the bottom of the hour. So 38, and then you got 40, 42. So what we're looking for is a turn here at the next couple of minutes. And then what do we have here? What's sitting down here? Look at that right there on the hourly. Next price leg into the next rejection, or in the next fair value gap below us here. Bodies traded above this. See this? There's your 38 swing. If this candle holds, there's your 38 swing. Crazy Ivan. He did not see you. We want to see him look back here and then say, no, I didn't see you, come back down. You don't want to see him go, oh, I'm going to come back and get you deeper. And we've already traded above here, so my guess is Ivan has seen us. And we're going to get a little more upside. Where's a place he can come back to? Sunday's open. Look at the range you're in. Excuse me. Pull your fib tool from here to here. Sorry, it goes right there. 50%, see that? Right on the beezer. Crazy Ivan, 50% of the range that you just got right there. Now you want to see that continuation on the downside. Crazy Ivan at 38. 38, 40, 42. There's a 40 swing point. Buenos dias, my friend Victor. How are you this morning? I missed the short because indecision. I feel shit, honestly. LOL, I saw SMT and all. Julian, don't be bad. Don't feel bad, man. Listen to all that negativity in that sentence. Oh, man. You didn't miss anything. You missed nothing, my friend, because there's another one coming around the corner. Just say I didn't catch that bus. I'll catch the next one. There's always plenty of buses coming my way. See, when I was saying about wiggle room, when you've got this, when you pull your fib tool and you go, okay, that's 50% of the range between the next swing high and the low that you're at, it's 50%. That is a trade above there. So is that your rule? You get out, or do you want to use wiggle room? You give yourself the 50% wiggle room. Now you look for continuation on the downside for the next price leg. Are you guys liking this? Is this kind of good? Are you finding this exciting? Are you enjoying reading consolidations? Are you enjoying reading the charts? Are you enjoying the times? If you are, smash the like button. Let me know you like what we're doing. If you're new to our channel, welcome. You can subscribe. We do this every day, well, at least for this week. And then we're taking a week off. I think Abs is going out. He's going to New York, having some time there. I'm going to go out and take a week off because I think April is going to be a dynamite time. So when I come back, I'm going to be bright-eyed, bushy-tailed, probably have a bit of a tan. Going to go somewhere tropical. And we're going to have an awesome time in April. It promises to be fun. Got lots of commitments this year, so there's going to be some times I'll be taking some time away from the charts. And I always suggest people take a break when you can. The markets are always here. They're always going to provide you something. And if you pick up some of the stuff we're teaching here and you get to stay in touch with the algorithm and don't let it kick you off, you can kind of let all that other stuff that you've learned, just put it on the sidelines right now. Put it in the back burner. Let it just simmer for a little bit. Grab a hold of this stuff and notice how accurate this becomes. And use this to enhance all those other things that you've used in the past. Because if you're trying to remember everything that ICT has taught you, my God, it's a monumentous task. It really is. But like he says, you don't have to know it all to trade effectively. You don't have to know it all. If you can study just this basic PDRA to PDRA algorithm, staying on the horse here, and you try and stay on as long as you can. If you get kicked off, pause or go back and double check where you are inside the range and say, that was me. That was not the algorithm. I got kicked off because I didn't follow the right. I see where it's reaching for now. then get back on the horse and jump on and stay on as long as you can inside the next range, and see if you can stay on it when it starts to extend back down. And if you're on the horse still and you're laughing, you're like, man, I caught that sucker right when that reversal happens. I like that. I got out here, didn't like the way it reversed. Then it came back down. You got another reversal pattern here above an old high. You don't get a chance to get in it, but you key off that breaker again from the downside, hit it. And look at this, man. You're collecting some serious ducats today. Even if you don't like, if you say, well, remember this breaker right here? Even if you missed all of that, you say, I don't care. Wait, watch. Let me just take this one here for you. I'm going to draw that one out right there. Did we trade below it? Right there. Right there. You came back inside it right there, 50%. And now you caught all this. You run for rejection blocks, old lows, whatever you're aiming for down there. So even if you miss that, don't worry about it. Catch the breaker. Catch the breaker. That's another entry point. So that's using one of the skills of, hey, this one didn't work out for me perfectly the way I wanted it to. Oh well, I'll just take it short right there, because that's another setup, like a 2022 model, I think. Bitcoin. Can I rub it in Bitcoin for you one more time? See that little tiny thing right there? Let me just open it up a bit more. Swing point. That little tiny inversion right there. Trade above it. Smacko. Right in it. And off you go. And as soon as it starts clearing up some high candles and getting into this fair value gap above you, slam yourself up to break even. Snap yourself some profits. As soon as you get to rejections, pay yourself. Deliciousness. I've got a couple more days left to get that account over the double, and right now I've got it sitting at, just so you can see, I've got it sitting at 196,102. So that's that Leap account that I started at the beginning of the month. I've almost doubled it for the month, which was my objective, and I'm not going guns blazing. I'm just kind of doing it nice and easy throughout the month, and just want to try and get that over a double, see if you can get 100% return on your money in 1 month. And just so that those of you who are tuning in, I did over leverage. I went more than I think they allowed you 1.4, and I was doing like 50 and 100. I was like, oh, this is to be perfect. Just trying to keep my leverage really low, and gone in for some big profits. Now I keep it around 5 to 10. Oh, sorry. Let's get back over here. You don't want to see it get above here now. This is really kind of pissing around here. That candle, eat through here. Josel, good morning. Your macro is about to begin. The propulsion block on the 4 hour is stopping him. So for you, Pumex, then what you're looking for is if that 4 hour is the time frame you're trading on, and you say, I want to get a reversal off of this, you're looking for a reversal pattern that supports your idea that you don't want to short here. You are looking for something that supports a bullish run for you. So you come down to the 1 minute chart and you look for your reversal, or you look for your proof off of you're not wanting to go short. Right now it's saying short. It's not saying long. So you wait. You wait for your setup to go long if that's your objective, is to go long. And if that order block on the 4 hour gives way, and it's 4 hours, so you're going to wait like 12 hours before you see 3 candles even make a swing point or even make something that's going to be of value to you. But if you don't get that and it starts to eat through it, then you have to ask yourself, what level are you going to start playing off of next to continue to support a low of the day? Is your 4 hour chart your line in the sand? You're saying that's the chart I'm trading on, and right now it's in a discount, I'm not interested in touching this. Then you don't. You wait a day or two for that 4 hour chart to give you a bunch more candles, to give you a level that you're interested in keying off of. You come back down to your 1 minute, find your entry, and away you go. So if we break this candle's high right here, this rejection, then I'm with Pumex. I'm going to go long. Literally that fast. And when you're in the 1 minute chart, you reserve the right to be able to do that, because when you're consolidations, it will bounce back and forth. So you will go from bullish to bearish to bullish to bearish, all inside consolidations. Every time it trades above, you go bullish. Then it goes bearish. Then it goes bullish. Then it goes bearish. So it becomes the linchpin for I go higher or I go lower. You want to see it really get a big bull candle away from it, come back, find support at it, and start pushing up. Then you go, all right, now I'm bullish. If I break this old high here, it becomes a breaker. I get above that, come back, find support at it like we did on these guys here. Then I'm going to go long. I'm going to sit inside this range, and I'm going to trade the range. Otherwise, I'm bearish. Even though it's tapping that, I'm still bearish till proven otherwise. And if it pops up there and closes above that, comes back, taps it, now I'm bullish. I'm with Pumex, I say. And he's looking at a 4 hour chart saying, yeah, I saw that on a 4 hour chart. So, yep, and I just seen it on a, I've got confirmation for your 4 hour right now. I've got confirmation that you're right, your order block's holding. If it doesn't, I can tell you your 4 hour order block propulsion candle or whatever it was you were looking at is not going to hold price. Right now it's not. Until it closes above that, then I go, yes, it is. Then it goes below it. Then I go, no, it's not. And I keep changing my mind until I see something of this consolidation getting broken to the upside or the downside that supports price. Use your CAM model to validate your 4 hour if you want. So Pumex is looking for an ideal time right now to confirm or deny whether that order block propulsion candle he's looking at is going to support his idea or it gets rejected and gets eaten through. And he's going to have to wait 4 hours to find that out. We'll find out soon. Now I want to see that close above here. 15 seconds. Breaker. It's got to give way. You don't want to see just a wick get up there. I want to see a body get right up there. And through this mean threshold would be ideal. Close up above here. Then come back and tap it. Then I'd be happy with that. Otherwise, we're back into another range again from this candle to that candle. You want to see how we close below it again. Into the mean threshold of this candle. Right there. Rejection block. If you want to let's see some action here. I want Pumex to get right with his, and again, it's not a case of being right or wrong, it's just looking for validation. There's no failure here, it's feedback. Right now, I'm bullish. I'm turning bullish for Pumex's idea. Because as soon as we can get here, above this and on top of that, then I go bullish. I'm bullish for here, and I'm bullish for there. I'm not bullish for way up there on a 8-hour chart or whatever, I'm just bullish now, and I'll change my mind if it rolls back over and comes back into this range. I'll be bearish again. That's why you're in a consolidation. You will flip-flop back and forth until you get something that breaks you out and you get a change of opinion. And don't forget, it's on a premium side. So that's a positive for a further upside prices. When you're in a premium portion of a range and you break to the upside like this, that's a good sign. So you want to see this big bold candle. That's what we want. So this is where you're looking, Pumex, you start to say, yes, I'm getting confirmation. From what I see right now, I'm getting confirmation that my 4-hour propulsion candle is holding price. I'm not going short. Here's how you prove it. Here's how you see that your 4-hour propulsion candle is being held. So now, in 5 seconds, I go bullish. You've gone to rejection block, come back here, find some support at this. So now we're going, hey, we're going bullish. And Pumex is going, yeah, I saw it on the 4-hour. There's a big propulsion candle there that's holding price. You say, sweet. I didn't know that, but I know it here. I'm saying I'm going bullish now. There's your tippy tap on the inversion. So despite the fact that I wasn't watching the 4-hour, my opinion for short changes right there. And it will change again if we trade through it to the downside and we close below that. Then suddenly I go, no, I'm going to go bearish again. Literally, that becomes the linchpin for higher prices or return back into this consolidation yet again. And all we did was a liquidity in the rejection block. We did not even take out the high. See that? Close right again on the bottom of it. So then I go, okay, now my favor is turning again. And I'm coming back into that consolidation. Welcome to consolidated environments, my friends. Does that make sense, Pumex? Do you understand why I'm in, I'm out, I'm in, I'm out? You've got to find support. And the algorithm will tell you when it's going to change its mind and go long and go short. Then you look for key-offs. Once it goes long, because some people might be saying, well, Darren, you could say that about any candle. It's going up now. Oh, now you can go, it's bullish. Oh, no, it's going down now. You're going to say it's bearish. That's not what I'm saying. I'm saying where that closes inside this range and this inversion here decides whether I go up or down. And then once I get that confirmation, then I say, great, now I need it to do this in order to really get some buffer in here now to really support this price going higher. I want to see that just really. So now we're bullish. We did not get into bearish, so we're still bullish. You see this order block here. You're above it. You validated it now. So I'd like to see this provide a level of support. Clear out these old highs. Turn that breaker into something delicious that you can get a hold of to go higher inside your range. Then I'd say, yep. And then you look for your setup in a range. You're trading in a range now. But if this rolls over here now and comes all the way back into discount array, eats all the way through this, then you go, all right, I'm back into consolidation again. Unknown which direction I'm going to go. Hence the reason we're consolidating until it finally busts out one way or another. That's reading price action on a 1-minute chart. Past few days are always consolidating, especially during macros. Ooh, Josel, that's a pretty broad statement. That the past few days are always consolidating. Have a tendency to consolidate. Always the universal quantifier, my friend. That when you say words like always, and again, I'm just being picky. I'm using my NLP stuff here. If you use like universal quantifiers, it gives you no rigid. It holds you in a rigid place. When you say it in a relationship, oh, you're always doing this. You don't give anybody a flexibility to move their behavior in one way or another. Because if you say always, that means you're stuck in a rigid spot. So, sometimes you have a tendency to, and I find it becoming more frequent. See how the words, just how you word that to your partner sounds less judgmental than you're always doing this. You're always doing this. In other words, I'm holding you rigid. I'm holding you accountable. I'm going to punish you because everything you do is bad, right? Always. Never. You never do that. Ever. Forever. You know, those are all universal quantifiers that will limit you. Anyway. So, sorry, I just sidestepped there. When you talk about macros about to begin, does that indicate a typical change in volatility or direction? It just usually indicates that there's a run. Now we've got 11 o'clock. This is interesting. 11 o'clock usually takes out a 10, usually trades back into the consolidation or trades back into the range that is created between 9:30 and 10 o'clock. So look for 62%, 50 to 62% retracement back into this late area here. From that high there, right up there, down to here, 62%, come all the way back into this order block and this mitigation block back here. So just kind of keep there, from there to there, we could see a run and then a rollover and come back down. I would not want to see this break 62% and start getting up higher, because then you anticipate that lunch hour is going to start taking out these old highs. I don't want to see this Sunday's candle. I'm just hoping Sunday's candle was going to give me some support once we bust through it, that I wouldn't see it come back to it. But we're just waffling here. I want to see this get the hell out of Dodge. You've come back into here. We have not broken that old high yet to the upside to seek higher prices. We have broken it here to the upside. Now we're seeking higher prices above here and here. Fair value gap fill, 50%, order block, find support right off the body here. You want to see that start really leaving here now if you want to start going higher. Well, you can forget this one down here. That price leg is not valid because I pulled it from a different place, so it's not valid. Body buffs above the breaker. Not really quite. We got wicks above it, so you know, I'd like to see a body get above it, come back, find some support at this, push higher. Right now you're bullish. You want to find some support off these levels, order block, breaker, and then push higher. If they start giving way, this is just a run on liquidity, and you want to see it really start to give up the ghost now. I want to see it, like Michael says, you want to see it get some real drive down and clean out these lows. If it's not going to make the 50%, that's a good sign for weakness. All it's doing is coming back into filling that fair value gap there, and just get some legs here. Just start really hammering through here, and you go bearish again the moment you get below here. We have a reprice rebalance. We've swung above an old high. Body trades below it. We come back in, tap it right there for a short. Did you guys see that? Did you catch it? Reprice rebalance. Run. Body trades below it right here. Come back up. Tap it right there. Oh no, you didn't tap it. Sorry. We didn't get it right off of there. So wait to see if it comes off of here. Right there to there. You want to see this giveaway on the mean threshold. There you go. Pay yourself at the rejection block. Pay yourself at the mean threshold. Whatever you're going to do, you're in a small range between that candle and that candle. Pay yourself. Move your stop loss really tight. You just made some money. Wait. If it comes back, you build some padding. If it touches it again, rinse and repeat. Do the same trade over again. And if it trades above you on a close, change your mind. Get out and wait. You have this little imbalance right here. Body trades below it, back up to it. Watch where this closes. So far we're still bullish, even though this was bearish. You collected something in your mean threshold here. You're still bullish, so be careful where we got to get through this mean threshold of this candle now to keep pushing for higher prices. Rejection block. So we're slowly starting to ladder up off of this. You want to see that mean threshold hold price, not just wick through it. So to me, you look at how many times do you get eaten through this candle. And if you eat through it multiple times, it becomes weaker and weaker, and it starts to lose its strength and its luster. And you start, every time you come back into it, then it loses. It's just prices eating through it until it just has no support anymore, and you just crash through into your next discount array. So you're still bullish all the time you're above that inversion there. And whatever you got off of this for a short, it's now closed. Oh no, that price rebalance still hasn't gone above you yet. See how the wick's eating through the mean threshold of that candle? Like this one was eating through this one. You're between these two. So they eat through that one, eat through that one. Now it's going to make a decision. Go higher or come lower. So it's into rejection again. Like array to like array. Is this going to turn around now and come back into here? Or are we going to give us a decent run up into 62%? We're consolidating in between this really tight little range right here right now. See how the wicks are just constantly reaching for the next array, and it comes back down. You got this candle here, it's now been validated above. We come back, body opens on it, trades back into the wick, and then we're starting to push back up into rejection block. We've got a swing point happening here. This is still holding price. Push higher. If you did do this one, revisit, reprice, rebalance, watch the next 9 seconds. Here's your fail safe. 5, 4, 3, 2, and it closed down below you again, right there. All that wick put you under a lot of pressure. Now you may say, I'm out. This is way too much going back and forth. So your fail safe would have squeezed you there, and your fail safe would have got you out right there. Close below, move to the sidelines, and you wait. So fail safe would have worked perfect there. Chances are it's going to blow right through you and take this 50 to 62%. Still got support here. We still got like array to like array yet. We're hitting rejection constantly. We haven't blown the high out yet. So the chances of us coming all the way into this rejection block in here, this swing point, from there to there, is it in a discount array inside this range that you're sitting inside from that high to that low? Pull your fib tool on the wicks. This is where it starts getting crazy. There's 50% sitting right there. That's your premium portion, discount portion. Chop, chop, chop. Look at those wicks, those probes trying to get up there. It's painful price action right now. 100 people. We have 100 people watching today. Welcome all 100 of you. when you talk about macros, does that indicate the typical change in volatility or direction? Yeah, usually when you talk about a macro starting up, usually that's where it starts to spool up and go in one direction or another. So you can expect that for the macros. And macros occur on the 50th minute of the hour till 10 minutes after the hour. And then there's supposed to be 2 or 3 macros after 3 o'clock or something. Look it up on the ICT index, type in what's a macro, and it will give you exactly word for word what Michael says. It's a good day. Is it correct that from yesterday when we had the equal lows formed at 18,510 to 18,520 on the majority of the PM session, that would be sell side liquidity? And if that's correct, why didn't we break it? Still bullish. See how that supports that price? We have not traded below it. We keep coming into it, driving for higher prices. There's your 50% right on the money. That's your typical 11 o'clock retracement back into that range. Again, let me just answer your question there. Sure, correct that we had equal lows formed at 18,510 on the majority of the PM session. 18,510. 18,510. I can't see where it is you're talking about. 18,510 would be down here. You said 18,510 to 18,510 on the majority of the PM session. That would be sell side liquidity. And if that's correct, why didn't we break it? Well, you have your swing point here. So you have a little inversion that happens here, a second inversion. And this is the kind of the theory we're kind of bouncing around with right now, and you've heard me mention this in the previous videos. If you get 2 of them in a row, and one candle blows through 2 of them, expect that second one to be the one that they retrace back to go higher. Again, it makes it sound like I'm form-fitting it, right? But if we have these lows on the hourly, you'll see it break above, come back in, tap it, run for rejection block, old highs, come back down inside it one more time, and then run for higher prices. We have another inversion sitting right here. We've come back inside it to go higher. We also have reprice, rebalance, come down, come back inside it. Now we're going lower. So you're stuck between one going higher, one going lower. That's the range we're stuck in right now. So we haven't broken this low. And we haven't taken out that low because prices were saying they were going higher. Now they're saying going lower. And now you're stuck between the two. So one of them has to give up the ghost. On the hourly, one has to go higher or lower. What's it going to be? Right now we can say we're going higher, but that can quite easily change off of this mean threshold of this candle here. So I look at the 1 hour chart now, because when you're in this range and we're looking for that retracement from the 50 to 62% after or at 11 o'clock back into the range, 62% puts me right in the mean threshold of this candle right here. See that? That puts me right in there. So I would anticipate that price, so if I'm looking for several levels, I'm looking for a reversal pattern to happen now in this level here, in around 62%. So I'd like to see a candle push up, create a fair value gap, trade back through it, into it, and then continue on the downside. And we've seen plenty of upside taken out over and over and over again, and it's leaving the downside. It's leaving that downside open. So I want to see this downside slowly get taken out now, because we've revisited the upside many, many times here. So unless you think that we're aiming for that old high there, this mean threshold has to give way, or the 62% has to give way. If it does, like I was saying earlier, now I'm starting to think more bullish, because now we're getting right above this candle, this clear inversion on a swing. See how we've traded above it, come back inside it. Now we're going higher. I want to see it start getting up into that 62% now. And that's where I'm looking for a reversal. If that makes any sense to you. Sounds like my girl. Well, I always like scrambled eggs at 11 o'clock Eastern time. Derek's going for his scramble. Still bullish. Good work, Pumex. Your 4-hour order block propulsion candle you're looking for. Here's where you stay. You look for your reversal pattern happening to go long to support your. I'm not going short. I don't believe you guys should be going short. You saw that as a level of. Now I'm curious. Does this my suspicion about that 4-hour propulsion candle? Do I get a reversal happening? Yeah, I got a reversal right here. If I get on top of that and come back into it, I'm taking that along. Because you guys all want to go short, I want to go long. And I want to start digging back into this range. He can start paying himself right here, move to break even. Pay himself there, move to 50%. Pay himself here, move, or pay himself there, move to 62%. He can use the fib tool retracement method for paying himself right off of that inversion. So that's how you would do that, Pumex, if you're trying to find yourself confirmation that that order block you're looking for on the 4-hour. Here's your setup to go long and how you can quickly pay yourself. If this is in a retracement and it ends up slamming back against you, you still paid yourself. Right now, you'd be in a zero stress trade with all this in the bank with whatever you decide to take out there. So hopefully that helps you validate your 4-hour propulsion candle. Breakfast burrito for DC. This consolidation low tapped right up against the new day opening gap. And again, I have no idea where the new day opening gap is. Does it change the way we're trading this on a 1 minute chart? Nope. You're trading retracements. You're trading everything. The new day opening gap provides a level of sensitivity. Then look at that new day opening gap. If you look at new day opening gaps, I'm not saying they're wrong, but if you look at new day opening gaps, you say, all right, great. Now I'm expecting a reaction off of that. If you do, then you can say, I'm waiting for a reversal to happen off of that new day opening gap. And if I see it, I'm going to take it. And I'm going to quickly start grabbing money out of it in case I'm wrong. I'm pulling my stop tight, and I'm going to quickly grab some money out of it. Don't shoot for the big stars. Just start running down and picking up all the bills that are spilling out of the back of the truck that's running down the road, and you guys are just running behind it collecting $100 bills, $50, $20. Who cares? You're grabbing money as you're running after the bus, the money bus. We have some daily open range still below. Yes, we do. Hypnotized by the chop. All 100 of us. Yeah, that was awesome. We hit 100 people today. Also the best. Cam 1. It did reverse the new day opening gap. There you go. So if it reversed the new day opening gap, then what Pumex was looking at for his propulsion candle and Lambo's looking at for his new day opening gap, you look for this. You look for that reversal pattern to happen to go long. Remember we were saying, oh, I'm short. I don't agree with you, Pumex. I'm short. Then I go, oh, no, I agree with you now, Pumex. I'm long, because that's what we're looking for. And it so far it's continued to pay long. And you pay yourself at rejection blocks, pay yourself at fair value gaps. If you're going from for a PD raise, if you don't want to trade PD raise, trade your fib tool. Pull your fib tool from the next range up, and as soon as you hit 50%, take your chunk out, like 50%, whatever you want, and then move yourself to break even or slam up right in behind it and say, I don't want to get any lower than this. I'm going to take myself some profits right there. Another 50% if it comes back and takes me out. So I got a 50% there and 50% right there. All of them are in trades that were in profit, and you move to the sidelines and wait for a better setup. And you got to make money off of your trade. And it was a zero stress trade The moment you started getting in here, your stop loss was down here. When it breaks a consolidation, you pay yourself, slam it up to break even. Even if you went up to break even right there, your stop loss doesn't get hit. And off you go. You're still in. And we were calling that while it was happening. So, and we called this, and we're calling this next if we get a continuation. And right now we're still bullish. This whole reprice rebalance, I want to see something clean, like a nice clean one like this, where you see it get all the way through, it comes back up. Stop loss is good. Your fail safe would have taken you out there, but that's a nice little reversal. And how you trade your fail safe is entirely up to you. Mine would have taken me out, and I would have just waited for the next entry off the breaker. This would have been the breaker right here. Trade off the breaker back into it here to go short. If you always miss your opening, look for the breaker. If you trade below the breaker, get back in at the breaker and go short, and use your fail safe just above you. Order block validated. Wicks. I hate but wicks. Prefer bodies. Body get below here. Then that becomes a nice little valid order block. Look at the range you're in right now. Look at the premium and discount. Where am I inside my range? What is in a premium? What is in a discount? Where am I? I'm in the discount or I'm in the premium. I need to move to a discount array for me to either go higher. So if this is the range here to here, 62%, see that? We pull back into the range, 50 to 62% of that range. Optimum trade entry to go higher. Back to order block. You want to see that give way if you want to go higher to 62%. That's good. Pumex ThetaWaveTrader, I've caught it. I'm in long from 18,556. 18,556. 18,556. You got in here? Did you get off of a specific level, or did you actually, you thought, okay, good, now that's providing me a level of support, and you're in. If you're good, now you've got the 62% retracement. You do not want to see it come back down here. You want to see it start scaling out. Well, you do whatever you like, but anyway, I'm glad you're in. I'm glad you're making money, buddy. Good for you. Want to see intermediate rebalance. I want to see that 62 get hit. That was a new day opening gap, not a new week or new week opening gap, not a new day opening gap. Now back to the new week opening gap. Bounced right off the new week opening gap form this week. ICT top men that I was in, I made 360 on that. Good for you. There's your 62%. You see how all those higher time frame order blocks, all those higher time frame points that you guys were looking for, all those levels are valid levels. They're all great levels, because what we're seeing on a 1 minute, you'll find on all those other levels. And then when you're looking on that other level and you say, no, I'm expecting this to bounce off of here, look for this. On the lower time frames, look for this to confirm that. And if you got it, take it. Because you're trading on a higher time frame, and you've got the same setup happening, or a similar setup, or your setup happening on the higher time frame. Look for confirmation that you're going to go in the right direction, and then get in on it. And then start scaling yourself out on the way up. Pay yourself constantly. or run further to your next higher objective on the 4 hour that you're aiming for. If this is all it is just a precision way to get your entry, then take it and trade it on your 4 hour and just close your eyes now and wait. Just move yourself to break even as soon as you can and let it sit there and trade for 4 hours to your next objective. Do you see how the logic of that and how it can pay you dividends? I love the way you guys are calling all these other different levels. This is what you're looking for. Once you call that level, look for confirmation to support your next upside retracement. So there's your 62% retracement. So we're looking for that. If we continue higher now, we want to see this order block give way, the mean threshold of this order block. I don't want to see that give way, actually. I want to see that hold, and I don't want to see this mitigation block give way. So I want to see that as my main level. We're done. We're filled that fair value gap now. I'm looking for a reversal. I'm looking for a change in direction. So I'm looking for this right here to give up on the downside. If it doesn't, then I'm still bullish. Still bullish. Still going. And then I'm trading from this one to this one, scaling out at all these rejection blocks on the way down. And then if it continues to really book it down, you leave a piece on to say, are we running for these old equal lows down here still? But again, what you guys are looking for in terms of your higher time frame reversal pattern right here, if that was your hourly one and you said, I'm coming all the way back to a breaker, I'm going to get long off that breaker. If I see a setup forming off that breaker, I'm taking it. Ooh, it's right there. I'm taking that sucker. The moment I clear above it and I come back to it, I'm tapping into that. I'm going to go long. And there you go. There's your confirmation off that breaker. Now, here's the entrance. Look at where we are in this breaker and this wick for where you would have caught the reversal off of that. And we say you would have caught it right there. You literally would have caught it halfway through your wick on the way back up again. That's as close to predicting the perfect bottom as you can get without guessing the actual breaker order block. Oh, did we say Bitcoin has some interesting things happening? This is interesting that it's not happening here. US dollar index bitmap. Ah, bitmap. I don't like this one. This one's not as clear. I like index. Where's the index? Index. Oh, history. I think it's this one. Yeah, this one's so much cleaner. So much cleaner than that other one. Look at this. Swing point. There's your reversal. Come above it. Come into it. Now you're going higher. You just paid yourself there. That's how quick you can make money. 2 minutes you made from there to there in Bitcoin. Delicious, people. Look at that. Small one here. Run above it. Come back inside it. You got a big run up. You got a reversal. Down. Oh, you don't get a chance to get in on that one. Reversal. Trades above. You don't get a chance to get in on it. Wait for the reversal here. You don't get a chance to get on that one. You do get a chance to get in on this one. Now you're running for there. Some of them you don't get in, you don't get a chance to get in on. Oh well. Wait for your perfect setup. Wait for your setup. Keep your eye on that level. Again, I like a cleaner one, but I'll take it. If it closes below it, I'll take a short on each one of those three there. I hate consolidations doing this. Give me the damn candle, come all the way through. Where's my carrot? Let's give us some motivation here. All right, watch. I want to see this close, not a wick. Don't want a wick. That's a rejection. Came into it. Give me a wick below. A wick below. I have to pee. Watch this level right here and here and here. Wick below. We want a body below, not a wick. If this just continues back up. Again, see how we're eating through that candle, that breaker right there? Last down, close candle before run above these highs. And we just ate all the way through it. I like that. It's a good sign for me. Look for a run back up into this order block here. I want a body. Don't want wicks. Some of you might go wick. Wick's good enough for me. I'm going to go short on that. I don't like it. I like bodies. So I'll be right back. But look for those three levels right there. I'm going to go for P, so it usually starts late. Alarm go. Oh, it did come down. Oh, let's get a short on that. Oh boy. Reprice, rebalance shit. I'm in the wrong spot. Wait. I see there's a swing point here. Reprice, rebalance, come back into it, go long. I'm stuck between those two again. I want this to keep coming back down. It's taken all the highs. This one tells me this is going to go short. I'm going to regret I got out of that. That's okay. Answer the phone. Someone asking the big D what to do next. That's just my alarms I set for specific times. I'm going to regret getting out of that one. This one is more solid than that one. I have to remember this. Reprice, rebalance. Is it going to give us some support to go back up? Wait for something cleaner. Better to wait for something clean. If it comes through, I'll wait for a breaker setup. Where is it? Breaker setup. Right there. Run back through it. In it. No body below it yet. No, I'll wait. $18,534. Did it just bounce off a new day opening gap there? I just tapped a new day opening gap. So what you're looking for then is if it taps the new day opening gap and you want this to continue going higher, you need this thing to give way here. We've just swept that low here. You need this to break to the upside, find some support at it, and continue higher, which would take out this one going shorter. If you did get that one going shorter, which you wouldn't have, those who took the wick, they prefer the wick, you would have been in taking out your, you would have made money on that. Those who choose to use the body comes back in. If your optimum entry is there, you see how you just traded above it, that's where it fails, comes back in, taps you, gets you out, you're going higher. There's your fail-safe working to perfection. That's an awesome one right there. That's a perfect example of fail-safe saving your butt. That's why you put your trade at the ultimate break-even point is right there, because if it fails, comes back, taps you, you get out, you're on the other side, you go long. You reverse again if it trades below this, comes back inside it, because that one's long. You want to get below this one again, so there's a tug-of-war between this one wanting to go long and this one wanting to go short. When they're overlapping like this, one of them's got to give way, and we've been marching up 62%. I want to see this one give way and this one support price, obviously, for more downside prices. Now we want to see this one close below there. And that price leg that we had from there to there will extend from here down below. We want to see it get through this consolidation to confirm it. But that could be the next price leg down. I'll draw that out for you guys. Puts us where? Puts us right back at this rejection block down here. Body closes below it. Now you're bearish. Bullish, bearish. Now if you don't like using that as confirmation, how else are you going to confirm this is either is going to, if this rolls over and goes all the way back down now, I'd say to you, okay, if you're not going to use those as means to say I'm going long and going short. Not that you're putting in trades there. You're just looking at seeing where price is acting off these levels, and you say it's tipping its hat saying I'm going short. Nope, it's tipping its hat saying I'm going long. I'm in a consolidation. So it's just going side to side trying to throw you off. Am I going to, the bull's spinning around right now trying to throw you off, and you want to stay on it. So you say, no, I'm bearish. No, I'm bullish. Now I'm bearish. Good. Now I trade below, get into the break. If that becomes the breaker, I'm going to trade off of that to get short because it's tipped its hat, told me where it wants to go. Unless I see something above that says this could reverse on me, I'm only going to trade back to that point. So I'm going to be really tight with my trades. Now, you guys may not like trading that way, but that's just reading as close to price action as I can get you without falling off the horse. So now I'm bearish, and you're bearish to the first point right here. Because if we get a big swing point here, it creates a fair value gap below these swings and then starts to trade up above it, I'd go bullish, fronting for these highs again. So that's first. We have no bullish tendencies here right now. We're still bearish. Look at the range you're in now. Start asking yourself, now that I've broken this one, I was between here and here. Now I finally broke that side. Again, we're in rejection block, so it's got to break the actual low. Rejection block just means I'm back into this candle. If I lose that candle, look for that one. There's a little tiny imbalance sitting right there, a little fair value gap. You see that? Right there. We've come back into the inversion that supports price going down, right there. Mean threshold. Sorry, my wife's texted me here. Hit it. See that perfectly. Now it can either rip down here. Look at this order block. If you want to get through it, look for that mean threshold to go give way, get on top of this fair value gap again to the upside. We've got a swing point here. You don't want a body getting above here, otherwise that starts to support the idea that we might be going above this inversion again. Price action's really tiring. It is. When you sit in the 1 minute chart in here and you see this much high resistance, it can be tiring on your eyes to try and look at this. It's painful to stare at, but it's good practice. It's good practice. If you're just waiting for your price to come to you and you're not watching the candles and you're not picking up an opportunity to learn something off of these, then yeah, it's going to be pretty boring for you. But if you're trading on a higher time frame, then that's your candle, right? You just trade it, come back 4 hours later, see what happened to that candle. We haven't traded above that inversion, so I like that, or that fair value gap. This is the rip down that I was saying about. Mike Tyson slapping you around, indeed. So he came all the way down to right on the rejection block again. Dip. And then come all the way back up into this guy. So we're just chopping wood here, side to side, rejection to rejection, PD ray to PD ray, over and over again. Order block. That validates here. So you're really between this candle, last down close candle. Which one body? Oh, this will be this guy here. You're inside this guy and that guy. Inside that small, tight little range, just going back and forth between the arrays. And it's going to start running out at these smaller ones, and then it's going to have to bust out of here, down or up. Again, side to side. Oh, there was another delicious trade in Bitcoin. I wouldn't trade this NQ right now, but the current range seems to show me that we went just above the equilibrium of the current range on the 5-minute chart, filled the 3-minute fair value gap, and have come back down. So yeah, we hit that 62% retracement I was talking about between 11 o'clock. Certainly not committed in either direction at this point. Lunch will get some liquidity, but I'm unsure which time. It does appear to me that we have a smooth set of tops from Thursday, Friday, and at some point I think I will want to get into that 1 hour fair value gap. Yeah, we're just chopping wood here. We're finally taking out the lows. Pull back into the range again. This is going into lunch hour. That's that whole mark in time, back and forth, extending a small little consolidated range. Kind of get excited about that. You say, okay, this is consolidation. When we get a bust out, you want to think, is this manipulation? Can I get back into this, grab a little piece and run for some liquidity above me, quickly scale out? Or is this the manipulation leg that runs back down? Then I get a cam 1, 2, 3 to go short, aiming for the next consolidation below me, or rejection blocks, blah, blah, blah. That kind of thing. It's painful to be sitting in here watching this, but it's fun to look at the candles as they trade from one to the next. Stay on the horse. Stay on the horse, you guys. Practice, practice, practice. See if you can stay on the horse. And if you get thrown off, you say, where did I get thrown off? Oh, yeah, I missed that one right there. And you're gonna. I miss them all the time. So there's a little piece of fair value right there. A little sibby. Keep coming. I like that 62% and the slow little grind down now. This could be the takeout that we're expecting for lunch, and then a pullback into the range. I would really like to drive you nuts. Look for this to get taken out for 12 o'clock or 12:50. Yeah, the macro should be starting again soon. So if we get a drive down to take out this just before 12 o'clock and then the return back into the range and looking for higher prices. If you're looking to clean out all this stuff here after lunch, 1 o'clock, look for this steady grind all the way back up to the lunchtime highs. That would be just one of those painful runs all day in the hourly. So we're looking for down here for lunch hour. Still bearish, no longer bullish. Keyed off that level, hit, all here. I got out right there because it traded above the body, so I got out. If it trades back below it again, you can get back in here or here, put your stop loss up above this guy this time, and rinse and repeat with your fail-safe. Not that you would, because it's just high resistance, and we're right before lunch, so wait for a better setup. You don't want to be trying to force trades inside this mess, but it's fun to watch it and see how, okay, I can see a setup there. I felt like this price action wants me to sleep on my desk and then snap for my stop loss. Yes, indeed. Just waiting for you to lull. It's that hypnotic kind of back and forth. And then you wake up and meanwhile it snapped through everything and I should have put a stop loss there. So remember, trading from one array to the next array, senior to discount, reversal to reversal. If you just trade inside that range as a form of, or just taking your fib tool, if you pulled your fib tool here and you're paying yourself from that range there to there, 50% pay yourself, move to break even, 62% move to 50, 70% move to 62, so on and so forth, until it literally comes back and takes you out. And you've traded everything you need to trade inside that range, using your fib tool to get you out. Because if it comes back now and takes you out, you'll go, oh, I should have paid myself at 50%. That's why when you're in consolidations, you use that rule, pay quick. Consolidations that are reverse on you and beat you up real fast. Now I've traded above here. You swept these lows, a little fair value gap, body trades above it. Keep your eye on that area right there. Now we're bullish off of here. Traded above it, so now you're bullish. And that's all it took, was just to come down to 50% of that range and then left. Come down to a discount, push through, look for your next price leg now, up. Those are the kind of things you want to kind of keep in mind now. And again, these price leg things may or may not happen, but it's something to kind of give you an indication of where we might be headed. Where does that bring us? Right into the close of that fair value gap right there. It finishes this fair value gap off right there for the next price leg up. We have to get through this candle though. Because every time you break a new high and you see a swing point, look for that to be the next reversal back down again. So you always, even though you're looking up here, don't put all your chickens in one basket or eggs in one basket there. You want to make sure you're always ready for the first reversal to happen and a setup to happen for a reversal in the opposite direction. When you're in consolidations, they're hard to catch every single time. When you're in bigger runs, they're so much more fun to catch because you catch more money on them. But these ones, it really helps to keep your eye practiced on looking for them. You broke that high, look for this. If it reverses, comes back through this, then you go bearish. You get rid of all this stuff in here. See that? So you're watching right here now. And where would you pull? Pull your fib tool from the high to the low and trade your fib tool all the way back down inside this small range right here, all the way back to the breaker. And if it doesn't come back into there and keeps going up, creates a propulsion candle, that's good too. That's fine. You see how this is the macro beginning? Right there at 1150, macro begins. Now that can continue all the way on until 10 minutes after the hour. Over here. You could be just running for that high, then slam all the way back down. But that spooling or unspooling of the algo occurs right there at that 50-minute mark. Lambo says the US dollar went up. Right up into daily inversion. Came all the way down, filled this. Back up to the inversion. I want to see it find some support off of here. If it starts to run all the way through that, then we're looking for higher prices in this little imbalance sitting way up top there. So you're looking for this to get up on top of here, find some support, and get up in there. So we'll see how it reacts off of here today. We have not validated this as an order block yet. All we have validated is this fair value gap. So far, it's holding price. You want to see when you see it get below this, come back into it, find some support. That confirms our reversal for a bigger, deeper discount. Bigger, digger. So did we get the objectives we were looking for earlier? Breaker, right in that mean threshold. Look at that, right in there. There's, if I stretch this out, you'll see it. See it right there? Swing point, come back down below it. Swing right here, and then come back up. Boop. Hit it there. Run for the lows. We run up into order block body, which is the breaker body. Snapping off of that, looking for these equal lows now. Propulsion candle. Breaker. Body trades above it right there. Trade back into it right here. Order block. Continue to the upside. You got this whole thing all the way down to here. So a refill of this fair value gap. If you trade below that and come back into it, takes this breaker out, and this becomes the inversion for shorter. Otherwise, you're still going higher. Jet lag, I love that name. 15-minute cam 3, you say? Consolidation, leg that takes out the consolidation. Reversal. Cam 1, cam 2. Oh, let's just pull this one up here so I have a better look at this. Not a very strong one. I wouldn't get too excited about it. I like the whole reprice rebalance idea though. If you were looking to make this a cam 3, you'd have to take the leg that takes out the high and look for 50% of that leg right there. If you close above 50% of this right here on a close in a 15-minute candle, breakout. That's your fail safe right there. You don't want to see, you usually see a wick hit it and then snap off of it and start coming back down. Not a great cam 3 model if that's what you're looking for there. Because yes, you could say that's a consolidation, run back up. Look in here. This reprice rebalance for lower prices. If you're looking to get in here, old high right here. So if this closes above this and you come back to it, get out there and wait. If you want to get a nice cam 3, let me show you a nice cam 3 model. Like this is a nice consolidation here. So if you get back into here, that's cam 1, cam 2, and if you get a really big deep discount into here, and then I run up, that would be a cam 3. When you're stuck in the middle of trying to make that a cam 1, 2, and yeah, I guess you could from there to there. And yeah, I guess that could be it could take it out, run below. Yeah, if you close above that on a 15-minute mark, then that's your fail safe to get out. If it comes back to you, break even. If it runs out whatever high you've hit again, that's when I usually close out my fail safes. If this one continues to, this one continues to roll back through there without closing above, and it continues to come back down, then stay on it. Right there, see how it's closed above? Now as soon as it comes back into it, I get out. Now we get out right there, just because it extended past that high. You take your stop loss. Instead of way up there, you take your stop loss here, because that's going higher. That's how I would have got out of that. Doesn't look good for me. It's not an ideal cam 3 for sure. Now, if you had this consolidation like this with a price leg that went higher on it, let's say this consolidation was down here and this price leg went up and this retracement back into 50% of that leg and then get short, that would be a perfect cam 3. If this here was down here and that price leg ran you up. I want to give you a really good cam 3 model that I can see. These are all cam 1s. Cam to cam, cam to cam, come back, trade it, take out the high, come back into it, trade back into it, get out. Trading cam model. These are great cam models. Lunchtime. There's a lot of cam 1 and cam 2 models here. Oh, this could be a cam 3 right here. Okay, so let me just see if this works out here. If that's your first cam model up to there, and let's go template, equilibrium. So as soon as you break that high, here's your reversal. So there's your cam 1, cam 2 is 50% of that right there, and a cam 3 would be 50% of the consolidation that takes out the leg from there to there. 50% right there. No, I don't think you pull it from there. You'd have to pull it from there. That's the one that's the impulse leg that takes out that low. That's the leg. So consolidation, leg snaps down below you. 50% brings you right to here. The wick puts some huge pressure on you, but your body stays above the 50. Then you trade higher. That's typically what a consolidation is. So you'll see this manipulation leg down. It runs back up, cleans out these highs, then it comes back down inside that manipulation leg. 50% of that manipulation leg, and then continues higher. That's a cam 3. Sorry, it took me a long time to find something. Meanwhile, back at the ranch, we have broken to the upside. See that little guy here we were talking about? If it breaks to the upside of it, changes your direction. Broke to the upside, you didn't get an opportunity to get back long on it, but at least you know that the horse did not buck you off. You said, I know if you break that high right there, I'm going to the upside. Aiming for your arrays. Now you've got this reversal right here. Body breaks down, comes back up inside, getting short now, looking for this rejection block. So first place to pay yourself. You see that? It's not throwing me off. Here's the reversal. Body gets below it. You come back inside it. You get short. You start aiming for order blocks, rejection block. Again, order block, rejection block. You're looking at these swing points as the next level down. So you want to see you pay yourself here or at the rejection block right there. If it pulls back into this range, you'll wish you would have paid yourself. And then if you do, and it comes back to you, do the same trade all over again. And you've just paid yourself. Now you're building a buffer. So that stop loss that you have sitting up here, you just collected right there as your fail safe. If it trades above it, you get short. Or if it trades above you, then you know you're going long again. It didn't. It wicked up there, so your fail safe would hold. As soon as you break that low, slam into break even, pay yourself here. If it comes back to you again, you get an opportunity to get in short there, take that, put your stop loss up there, and you've just paid for your stop loss. I hope you guys see that. Eric, CAM model stands for consolidation attack model. It's not a Michael thing, but it is a Michael technique. It's just not, Michael never called it CAM model. I just named it CAM model because it's a consolidation attack model. He gives you two different ones. I gave you the third one. And here we go. There's your reversal. So now you see why you're bearish. Doesn't shake you off, man, if you know how to stay on the horse. You pay yourself at that rejection block low, and you want this to continue down now. You see how you caught the swing? Everybody else is looking at their charts going, I have no idea what it's doing. You say, well, I know what it's doing. It's going bearish right now. And if you're smart, you can pay yourself real quick. You start unloading, move yourself to break even. It doesn't matter where it goes from that point. You say, I took $50 out. I took $100 out. And I'm moving in. I'm sitting there on the sidelines now because every time it changes direction, I capitalize on that and I run for the first rejection block. I pay myself, move myself to break even. And if it takes off with me on the horse, I'm going to catch some delicious run. And if I'm managing it from the back end, I look for the first fair value gap to break to the upside after a swing. And then I know that reverses direction. If I don't see anything like that, I can expect the price will continue down. Unless you're looking for reprice rebalances. In the 5 minute, we are bullish. No, I don't know what you are in the bullish in the 5 minute. I know in the 1 minute I'm bearish. Let's look at the 5 minute here. No, you're not. You're not. You're still bullish. I don't see anything in your 5 minute that supports one way or another. You got to get above here for that to go bullish. I don't see any inversions going on in here on a 5 minute chart, except for over here. When the body traded above it, you get back in, but that was the open when it swept you out. Otherwise, I don't see anything in here that says, other than this inversion here, your body trades through it. You've come all the way back up here to trade into it to get short. You've already taken out these lows, so it loses its luster for me on a 5 minute chart, but it's still doable. So no, I'm not bullish. I'm not bearish. I'm pretty much sitting right in equilibrium on the 5 minute chart. No decision. It needs to get below here on a 5 minute chart to trade into it to get short for you. Unless you're just looking at, we've traded above one of these order blocks here and we're mitigating off of it to go long. I'm not sure how you would, what you guys would want to call for that, but it's not, there's no inversion in there that I can see just yet. I'm still capitalizing on this guy right here. going short. Collect here, collect here, collect here, here. In the discount array, you're looking for a discount and this order block breaker down here for more collections. And I would slam that sucker right up against there now. If trade's back against you, you made some money and you move to the sidelines. And you snatch something really quick out of a market on that. If you can't see that, then... And it wasn't just gambling. That was exactly the price entry. And that's 1 minute charts showing you how to make money on a 1 minute chart really quick. A couple of minutes. You put a couple of bucks on that, one handle on that, you would have made $100. But most people get greedy and they go, no, it's got to come back all the way into that range. No, there's a swing point there. Take some money there, wait, move to the sidelines, or move your stop loss to break even to turn it into a zero stress trade. Take another piece there, move it to the previous one behind you, and if it comes back and tags you out, you say, all right, I don't care. I'll load it in again right here. If I get back in there again, I'll start that whole trade over again, and I've paid myself here and here. So I've maximized, I didn't take any losses, and now I get to come back into the trade one more time if it comes back to me. If it doesn't, I'll wait for another setup. I don't care. They happen all the time. They happen all the time. And you can see those cam models on our channel here. Eric, you'll see it says cam model attack or consolidation attack models 1, 2, 3. And there's a 30-minute video on it. You can watch that and then come back in here and we'll show you how to finesse it if it's something you're interested in. 75% of the range. You explain how to take small movement and how can I take bigger movement. Just amplify it on a bigger scale, that's all. We're in a consolidated market, so you take the small ones. It happens on a bigger it happens on a bigger scale and bigger markets. You know, look for the higher time frame thing, and there's your bigger market. That's how you take it on higher time frames. If you want to hold it over a longer period of time, if that's what you're asking me, then you use your higher time frames to pick your spot. Look your lower time frames to pick your entries, and then you pick your exits based on the higher time frame, and just let it run to where you want it to go. That's how you stay in it longer. In a 5 minute, we are bullish or bearish. I already explained the 5 minute chart. So you're back inside this range right now. Pull your fib tool, trade that entrance off your fib tool if you want. Again, these are just several ways that I like to trade. Once you get in there, you can trade off of specific arrays, or you can just trade the 50% fib rule. As soon as you get back to 50%, take 50% of your trade off, 80% of your trade off. I don't care, whatever you want, you decide. As soon as you hit it, like right there, you take some money off and move your stop loss to break even. So whatever you get, if it comes back against you now, you scale that a piece right here. Now if it runs to 62%, take a piece off here and take your stop loss, slam it up against 50%. Then if it moves to 70, take a piece off there, move it to 61, 75, go to 70, 76, 78, go to 75, and eventually in here somewhere it's going to come back and tap you and close you out, which is right where your fair value gap ends in a discount array inside that range. Works great. That's just my way of doing it. You can do whatever you like. And again, it's available to all you guys if you want it. For a special low price of a thumbs up in the thank you section. So you like what we're doing. Doesn't cost you anything. Just hit a little thumbs up. Tell me you like what we're doing. And if you really like what we're doing, subscribe. Stick around. We're doing this all year round. And when we get into range bound days, Oof, when we start getting into trend lines or trends, we're going to kick ass. If we're staying on the horse inside a consolidation like this, what happens when we start getting into days where you just see these up candles just going up, 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 up? I'll show you how to stay on that horse. Did you pay yourself at 50%? See, when you're in these consolidated areas, pay yourself, man. If this goes back against you now, you're going to be like, ugh, I thought it was going to come to this fair value gap here. Oh, damn it, it took me out. Well, you didn't pay yourself at your points that I talked about, either the PD arrays or the 50% rule. Thank you for all explanations. You're very welcome. You're very welcome, sir. Or ma'am. I'm not sure who that is, but you're welcome anyway. This might be it for me. I might be cashing out now and moving to the sidelines. I'm liking Bitcoin. Looks like a lot more fun to play. And what's left? I'll look at some of these other ones here. Today we're looking for this to run back into this consolidation again. So in this last hour, we have break below this little tiny imbalance you see right here. You see that? Run below it, come back inside, stop loss goes above you, runs back down. You're collecting out on your range that you're in. There's your discount breaker right there. So as soon as you trade into your discount breaker or you trade into 50%, pull your fib tool here. I'm going to show you the same thing we just did right there. I'm going to make this bigger so you guys can see what it is I'm talking about. See that right there, that reversal? Body comes in. You trade it short right there, stop loss goes up. As it starts to run down, pay yourself at 50%, move to break even. So move to wherever that was, right there, break even. 62%, move to 50. So, and this, don't forget, it's all in this candle. 62%, move to 50. It hits 70%, move to 62. Goes to 75, go to 70, goes down to 78, go to 75. If it makes it to 88, you're lucky. If it comes back and takes you out at 79. So you made all of that from in here. You had a bit of a drawdown all the way back into here. If you use your fail-safe rule, do you have wiggle room back to a breaker? And that's entirely up to you. How you finesse, I've given you your fail-safe. How you use it is entirely up to you. If we use my rule, you would have been out. The moment your body trades above it right there, you would have been out instead of in. You would have been in and you would have gone, oh, it closed above. As soon as it comes back into me, I'm getting out. Instead of giving yourself a wiggle room and say, oh, you know what, mean threshold, I'd accept mean threshold of that candle. If that mean threshold is broken to the upside, then I'm definitely wrong. And it's not. We close below it. So boom, you got to collect. This is all experience. This is all wiggle room. This is all finesse. This is all you. You decide what you're going to do with your fail-safe, but have one. If you don't, if you're old school and you didn't have a fail-safe on that, you just cleaned house. You say, screw your fail-safe, Darren, it doesn't work. Anyway, that's your ES. Swing below, reprice, rebalance, come back up through, come back into reprice, rebalance, take out the high. Just all in one candle. Boom, gets you in, comes back up, cleans out your high. All in 1 hour candle. You just made whatever number of handles you made right there. And Dow Dixie is starting to climb higher. Where do we find the reversal? So if you look right here, if this was coming down here, you say, I want to see it react off here. I'm looking for a rejection off this area. that supports price coming back into that imbalance above me, right? You're on a higher time frame. We're down here and we're looking for an optimum time. So look right here for the optimum time to see a setup form that lets you go long. So let me draw over to your 15-minute chart. Keep your eye right here. And I drop this down here and I go right there. So that works out to about here this morning. You're looking for that setup to occur for a reversal. Then you see it starting to climb back up. You go, ooh, that's good. If this gets above here, ooh, I love that one. I'm going to get in on that if I can get above there. So you wait. Oh, it goes above it. You go, sweet. I'm expecting that level right there. I've just found my retracement in a 15-minute chart. I found my retracement. Those of you who like to play on 15-minute charts. And all of a sudden it comes back up, comes in. You get to max out all the way into here, and you've caught all that run up so far this morning. That's what I mean. If you're higher time frame, if you practice this on a 1-minute chart, now let's go down to a 1-minute chart and see if we can find the same kind of setup here. That was at what time? 3 o'clock in the morning? Down here. Let's make this bigger so you can see. 3 o'clock. Looking for our setup at 3 o'clock. So 15-minute guy was way up there somewhere. Here's your 1-minute guy. He found that little reaction off here and goes, ooh, look at that. Boom, right into it. Stop losses here, and it starts to escape. You caught it, the turn here. While the 15-minute guy noticed it up here, you noticed it down here on the 1-minute chart. So that's why I tell you, I see it before you do. You may say, yeah, that's a spot I expect it to reverse, but you don't have confirmation on that on your 1-hour chart yet until you see a wick coming all the way back. Well, here's where the algo turned and decided to come back up. I'm not just custom making that. We picked that on the chart we were looking at on the daily, and we found it right here as the confirmation point on a 1-minute chart with a stop loss sitting down here. You can either agree or disagree with that. Go back through your charts. You'll see. So if you're expecting that to happen then, when you get over to your GBP, so let's go to your GBP at 3 o'clock in the morning and see if there's something that happened at 3 o'clock in the morning on GBP that will confirm that we have a turn happening at 3 in the morning. Here's your 3 o'clock in the morning. We have a reversal here. We get above that high. Body trades into it right there, and you get short. Boom, 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 ba-doom, boom, boom, boom. You're going down to here. Then at 4 o'clock in the morning, you're seeing the American dollar's going back up again. That should put downward pressure on us from 3 till 4, right? Wasn't that what we did? 3 o'clock till 4 o'clock? Then all of a sudden we get a reversal, consolidation, break above your consolidation with a body. You don't get any cam models on that. If you're using that high as your consolidation, that is. You wait, you break an old high, there's your swing point. Oh, it took you out. All right, well, you had another run above your old high. There's a reprice rebalance. Body trades below it. Do we get it? Do we get to get in? Right there. There's the body close. You just got in. I want to make sure you see that. Reprice rebalance. Come back in. Body trades below it here. It literally comes up, taps you in. You get short. Aiming for here. Aiming for here. Looking for a lower PD array. Breaker. Look at that right there. Into that sucker. Into the consolidation. Run back up inside this range right now. There's 50%. Breaker. See? Weird, hey? Breaker to breaker. Breaker to breaker. Like array to like array, boom, boom, inside. And then all of a sudden, we slam through. We have a reversal pattern happening. No body gets above it yet. We wait, we wait, we wait. We get a body trades above it right here. See that body just clears it out there, comes back inside it, gives you an opportunity to get long. And there's your long. I'm telling you, folks, it happens everywhere. Oh, it finally came down into our range here. See that? The reprice rebalance right there? Right on the money. Right on that high. Breaker. Trade back to the breaker. Get short here. If it trades through the mean point, so your stop, your fail safe is right there. If it trades through the midpoint of that on a 50%, trades back into it, get out. You're wrong. It's going to go higher. Now, you broke that low, I'd slam that right up against break even, put it into some profits, and I would pay myself a little piece right there, and then I'd let the rest rock. Quickly move to break even. Pay yourself right away off that breaker. If it whips back on you, you paid yourself a couple of bucks and you move to break. Zero stress, man. You turn that into a zero stress trade. But you don't worry about it. Let it do its thing. You start saying, what else can I aim for down here in this? I'm in a consolidation again over here now. I want to see it get through this inversion on the downside now. Body gets through it, come back up. That puts some more padding between that breaker. Confirmation that that breaker gave you some support. You get below this inversion now, come back into it. That's more padding. That's a good solid area to get short off of. And you want to see it slowly chew through that whole mess that was down there. Watch the carrot. Mr. Okay, not a Mrs. or Madame. And here we go. No, I want to leave this thing alone here now. Just start coming. Leave that Sunday open. I'm sick of it hanging around that damn Sunday open all day here. This could go all the way into Wednesday morning. We come back and tap that on a Wednesday or tonight in London or tomorrow in New York. Keep your eye on that level. If this hasn't set the pace and we finally get this hammering down, we should see the big run all the way down tomorrow or today. Hopefully, if that's the run up, we just see this just auger down for the rest of the day now. But we may see this come back up and dick around in here. But this is the key level tomorrow or tonight in London. Those are your two levels. And if after tomorrow's New York Open, we haven't made a decision whether we're going higher or lower off of this line right here, then you move to the sidelines and wait. You've got to do sniping. You got to do this small range sniping, which we've been doing all day here. Staying on the horse, still collecting. You can still collect points inside this thing. We can forget that one. We weren't gonna. It's another price leg that didn't manifest. So hopefully you paid yourself on the way down here, 50%, 62, blah, 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 all the way down. There's another opportunity to make some cash there off of his swing point. And that's 9 or 12:30, so I'm pretty much cooked now. My brain is fried, and I haven't had any breakfast yet, and it's 10:30. So look for that breaker. You want to see this breaker hold price. If you start losing the mean threshold on the upside, there's a little tiny imbalance sitting right here too. See how we've swept the low? Got to be quick. You got to be really observant of these things, or you'll miss them. That's broken to the upside already. So now I'm inside this range now. You want to see price get through here for further upside. If this is your reversal pattern that you're looking to get in on, unfortunately you haven't been able to get in on it yet. And it's already starting to take out key levels. And we haven't really taken out that low yet. That inversion we were hoping for it to go is between this candle here and this candle, or this inversion. Two senior arrays, we're looking for them to try and who's going to give it up. Right now you've got support to go higher. You pay yourself at those arrays, at the fair value gaps, at the inversion. So there are PD arrays above you you can take money out at and start moving your stop loss into profit. Got to be quick though. You got to know what you're looking for. Whew. What do we got here? We picked up 4 more people today. And only 40 likes. So we had 100 people in here. 60% of them, yeah, didn't care much. Didn't impress you, huh? Okay. We get into bigger range days, you'll be impressed. I figure if you can still stay on the horse inside all this mess, that's more impressive to me than being in those long range days that are way easier to get in. If you can pick money situations out of this high resistance, to me, if you can't see that that's gold, you can't see that that's been like an ultimate shit day for trading. Like, look at that. That's just like a cheese grater. And yet we still gave you trades to get in and make money on. If you can't look at days like that and go, wow, that's shit, and yet I still made money on it because I saw there's opportunities. You got to be quick and nimble. If you're not, move to the sidelines. If you're one of those people who just love trading, you had lots of opportunities, even in spite of all this crap to play. But you got to be nimble. Mean threshold, see that? Mean threshold, holding price with the bodies. You want to get below this candle, below that candle, start pushing through here now. You want this to be the next price leg down. Unless it comes back here, find support, and then you're looking for inside this range. From here to here, look for the fair value gap above you, and the premium array above that, and this fair value gap inversion to go short again. So you're between this guy here and that little guy right there. That 15-minute order block, I have my eye on 10:30. If price closes below the mean threshold, then that low is next. So far, it hasn't. Jeez, says Julian. Last candle dug into it, but closed above it. Eric, just gave you a thumbs up. I appreciate the walkthrough and the explanations. You're very welcome, my friend. You're very welcome. We hit 40% of our 100 people that popped in today. We hit 40% likes on that. We still are holding like Spartans. Yes, indeed. Sparta. Drive through it. Drive through it. Give me my next price leg. See how it's just come back into that little inversion there? Let me make this a little bigger. Don't know why I leave it so. See that little tiny guy right there? Right into it. We're reacting off of that. See it snap off of that? I just love it when it taps it and bounces off of it. Now we're either going to drive through it. Come on down. Wicks can do some damage. Look at that. Literally just closes on it. Come back up inside it. If you're long, pay yourself a piece right there. Move to stop loss to break even, because you're in a really tight little range here for consolidation. Pay yourself. And if you can get to another breaker, pay yourself again. Move it into this guy right here. Save yourself some money if it pays there. Get to that guy. Good. Pay yourself again. If it gets to the next high, pay yourself again. See what I mean by that little guy right there? You literally came back and grabbed it, and you made money right there, all in 1 minute. Like 30 seconds. Like, we're still 16 seconds left in the 45 seconds. You made money from there to there with zero drawdown. Look at that. You're really driving up now. And that was all because of that little fair value gap we pointed out when it was up in here. See? Price action. It can't shake you off if you know what you're looking for. Your context is gold. Like I coupled it with SMT areas on where I expect it all expected, and it's literally 90% perfect of the time. Well, there you go. You get 90% hit rate with perfection. You've just brought your trading to a whole new level of fun. Stress-free trading. Throw a fail-safe in there, and you tweak that the way you like it tweaked. My friends, you've made some money. And I just gave you a 1 minute candle to make you some money right there on a 1 minute candle. Now, how many people took it? I'm not saying you have to, but if you did and you trusted that and you took money out, you just made money in 1 minute. And that was probably a couple $100 on a one lot. $100 a minute. I don't even think lawyers get paid that much. And you see how you're in a consolidation and you're you're trading against the trend, but you still caught something and snatched some money out because you saw that there was an opportunity for it to come back up, and quickly snatch some cash out of that. Even if you're counter trending an environment, you expect it to continue down. One candle, you grab some money out. I'm not saying you have to do that, but if that was a daily candle and you came into that right there, and you're expecting prices to run back up, you ran the entire day looking for your perfect setup down here on the 1 minute chart. Opened up at 8 o'clock this morning. Right there, you saw your swing. You're aiming for your first rejection block, and you ran all day and finally hit it. Wouldn't that be delicious if this was a daily chart? And it is. It's any chart you want it to be. This is fractal. Nothing that I tell you here is not found on any chart, any asset class, anything that runs with candles and is run by the algorithm. Stocks, bonds, commodities, corn, wheat, you name it, gold, metals, palladium, right? Same thing reversal, or same thing again. So you're saying to yourself, I get to do that same trade all over again. If I'm wrong and it trades below me, like right there, you get out. So it just closed below, opens, get out. You're on the wrong side of it now. And if it rips back through you, then that's just my fail-safe. Stop loss was here. You didn't get out. You're going long. You're paying yourself already. Slam your stop loss up against this. And as soon as it comes to 50% of that, pay yourself some money, move yourself to in profit. Right. You'll see it. Just wait for it. Ooh, denied. You'll have to wait 1.5 minutes. Now it'll be like right up here. That's it. I'd be out. If it didn't take me right there, I'd be out. Just because we traded below that right there. If you did stay in it, try to run for your 50% in that big old fat candle right there. Otherwise your stop's going to get taken. It's going to continue down now. The price went above, but did it close above 50% of the wick? It can go above 50%. It's just when it closes above 50% of the wick. Then you could be looking for a discount and then a run back up above that high. So there's your rejection blocks. See how that rejection block's being tapped on the downside? Now you might get a revisit of that mean threshold. Above the 15-minute fair, 15-minute. Let's look at the 15-minute. It ran the 15-minute wick, 50% of the wick. What are you talking about? You're inside between this candle and this candle right now. There's the inversion to go higher. It trades back through it right there. You have the opportunity to get out right there. Before your stop gets taken, you get to break even right there for a short. You're on the wrong side of this. See how that happens right there? You're on, you're like, yes, I'm going to smash this now. Look at the range you're in. Start trading 50%, 62% on the way up, or PDRA to PDRA if you want. I don't care, whatever method you want to use. If you would have used this here as your opportunity, or that one closed above it right here. So use this one to go long, and you go long up to order block. If you took your 50%, 62% on that candle alone, you would have made some money. If you don't, you're trading PDRA to PDRA, then there's your order block breaker. Trade back to your breaker, take some money out, move your stuff to break even. Trades below, and you think, I'm going to get in again. I'm going to go try that same trade over again, and it trades below you and go, oops, I'm on the wrong side. Comes back up. The moment it opens and comes back into you, you're out. So now you're on the right side, you're on the wrong side. Now it's coming back down to you. Again, that's what my method of trading fail safes. So I'm not sure I understand, Julian, your 15-minute fair value gap, your 15-minute wick. There's SMT there again. Okay. I don't understand SMT very well, so I got nothing for you. See how the body's starting to trade below that now? That inversion we've been finally waiting on? You see how you counter trended that one candle to profit? You're on the wrong side of the overall swing, but you caught that little swing right there, back to that point there, and you smashed some profits. Anyway, ooh, I'm on the wrong side. Good thing. I'm on the wrong side right here. I tried to go long again. Oops, I'm on the wrong side. Out. Close out. As soon as that opens, close out because you already traded below your low. Right? Small, quick, precise, you're out. Then all of a sudden it came down and took the stop loss, and you're like, ooh, man, I made some money on a one, and I broke even on the second time I attempted it. I'm in the wrong side of the market because I'm still going down. And you can still counter trend it and still make some money. How crazy is that? David here, still observing. You just keep watching till you start to see it, David, and then start trading it on a demo account or paper trade it. Just put some lines on the chart. You don't even have to trade it. Just take some sticks, put some sticks on the chart. And then start moving them around to where you want. I'm going to go in right there. And if it trades above that, I'm going to get out. I'm going to put my stop loss there. I'm going to move this. I'm going to pull my fib tool. And just practice pulling your fib tool, watching it. That's how you get better at it, by practicing it, until you get to the point where you can just look at it and go, oh, I see that. If it goes in there, I'm in. Draw your line or take your crosshairs, like I've always got mine set in crosshair mode. So I'm always looking and I'm always lining that line up right there. I'm putting my line on there and saying, as soon as that closes below that right there, I'm out. Because that's my rule. If it trades back to me, I'm getting out. I break even. We're heading for the low. And sure enough, we head for that low. We take it out right there. Just because that was my tip. That was my rule that says if it breaks that, I don't give a crap. If it's just a little bit below it, I'm out. I'll move to the sidelines because I like this many, many, many times. You're going to see that come down, tap that, and blam, it just takes right off. Like right here. See that? There's a little gap right there. You trade below it. You come back in it. You literally hit right on it and slam-o. We're way over here. That's what you want. You don't settle for this crap where it just pops below. You think, no, I'm not. Well, this is a consolidation. I want something that's a nice sharp turn like that. Come back, get in it. I know where you're going. You're going down. This is all just chop, chop, chop. But if you're quick and you can get yourself some money, catch it. If you're wrong, you're on the wrong side. It'll tell you real quick, or it'll come through and take you out fast, and you'll find out you're on the wrong side. Look at that. See how the body trades below it? Ah, oh, look at this. We trade back to it. You get another opportunity to trade back to it, and we're continuing on the downside. La, 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 la. Come to the carrot, my friends. 15-minute rejection block. Will it hold or will it fail? He says rejection block, rejection block. Right here. This is what you're looking for, Derek? Is this to hold or fail? Well, we're about to come down to it. So until we see something showing us on the opposite side that we're going to go back up. And I don't want this to be it. I really don't. I just want to see it snap down, keep coming here. Imbalances, gaps, SIBIs. That's what you're looking for in here for reversals. So when that shit starts happening, you go, oh God, here we go again. Potential reversals, small range, big ass candle sitting right here. If we trade back into it and we get long, then we're back into this range again and we're waiting. Trade above it. See that? Come back, tap it. Inside it. There's the other one below it. Just tapping the top of that half. As soon as it takes that high, pay yourself. Quickly pay yourself. If it takes that high, pay yourself again in that mean threshold. Move your stop loss right up to here. You've made yourself some money and your stop loss is in profit. If it moves it to here, take money. There you go. Boom. Take yourself some money. Move your stop loss up to here now. If it takes that high, you start getting into this order block, that little imbalance right here. Pay yourself again a big chunk this time, or pull your fib tool and do your 50, 62%. Whatever you're doing here. If you're pulling your fib tool, whatever your method is, stick to your method, whatever it is. So 50%, did you pay yourself? Yes. 62%, you didn't quite get it yet. You're at least break even. Pay yourself a big chunk. If it comes back against you now, who cares? If it hits 62%, slam it up against 50. If it hits 70, you can either keep trailing it up like that and letting the mass, your main amount. Let's say you had 5 lots on right here. You put 5 lots on, it gets 50%, you move it up, your 5 lots up to break even. If it hits 62, move up to 50. Don't take anything off. You just move it up to 50. If it moves to 70, move it to 60. So you're always one behind, and that's where you're going to max out. You're going to get your full profits right there versus there. Right here versus there. Aren't you glad you paid yourself at 50? Aren't you glad you paid yourself at the rejection or the mean threshold of that candle? Quick, see that 2 minutes, you just made yourself some more money. And this counter trending crap, right? And you get another opportunity to get, oh no, you don't get another opportunity there. You got one opportunity to go long. It tapped, you got you in, load up. If you're at break even right now, and you've taken 50 out here, if this runs to 62%, then quickly take your stop loss that's break even, slam it up against 50%. I take another portion off of the 50% if it hits it again. Anyway, there's many different ways you guys can trade that. I'm going higher now, but is she? Almost golf time for me. Yeah, I got to go get some exercise. Go for a walk or something. Pay yourself at 50. Don't forget you're counter trending this thing too. So your overall bias right now is bearish. You're counter trending it. So you're trying to catch all these little runs back up into some PD arrays you can snatch some profits off of. Aren't you glad you paid yourself here and here? You're break even now. You're out. And you made some money in a short little snap off of that imbalance. Inside that range. It's crazy. If you're quick, you can make some money if you know what you're looking for. Ooh, and what's happening over here? What's happening over here? Load in here. Take this one here. Stop loss goes nice and tight. And you want it, like if it pops below, comes back up, get out, because it's still going to keep coming lower. But that's a nice little reversal going up there. Trade from this one to this one. Like array to like array. Premium, discount. Just saying. Carrots. See how you counter trended that? Took some money out and it continues back on the direction it's going. Woo! It just went for a quick dive on that carrot. Well, I hope you got to enjoy yourselves today, folks. I hope you got to learn something. Even in these high resistance markets, if you know what you're looking for, there's opportunities for you to make some cash. Some demo money, that is. There's lots of demo ways to make money. Lots of demo ways to make money. Practice them, practice them. You see, I'm not taking them all, but I see them. I explain them before they happen. I explain them as they're happening. It's not like I'm form-fitting this. I'm not using all hindsight. I'm looking at the charts and I'm staying on the horse. I'm showing you how to stay on the horse even in high resistance liquidity runs like this. And you too will develop that skill if you haven't already done so. Oh yeah, Julian, Bitcoin is just, everybody hates Bitcoin, but because it's so up and down all the time right now, it's just giving you one reversal after another over and over and over again. Way cleaner than this crap. Way cleaner. Oh, come to daddy. Come get you some carrot, my friends. Right when I'm ready to leave, it always does this. I think it's probably because we're getting near the end of lunchtime. So I always leave right when it's about to do some afternoon Lovin'. Fly me to the moon, let me play amongst the stars, let me know what life is like on Jupiter and Mars. In other words, okay, so that's going to be it for me. I've had fun with you guys today. Hopefully you got something out of it. Again, if you like it, smash the like. If you're new, subscribe, pop in. We do this every day, and I try to give you a good idea of what how to stay on the horse on a 1 minute chart. In good consolidations like this is a really good opportunity to see how this minute to minute trading works. If you can stay on a horse inside of all this and it doesn't throw you off, you can understand price action pretty good. You understand price action pretty good. It's just going to make your higher time frame charts so much more reliable, so much better. All these arrays that you guys are all been quoting, and all the SMTs and 4 hour this and 15 minute that. Did you notice I wasn't making any reference to that until you pointed it out? If that's your objective and that's how you want to get in on that trade right there, and that was the time frame that you're sitting at your 15 minute or your hour or whatever it was, if that's your setup to go short now to aim for your next hourly objective, you're welcome. There's absolute precision for you. That's what you're learning here. That perfect entry on whatever time frame you guys want to play on. And even counter trending it. Even when you're wrong, you can be right in so many ways if you're smart enough to get out in a quick, snappy way. This may change how you think about when to get in and out of a candle. What really is liquidity for you? Are you looking for that big range stuff? Or here's an opportunity. There's a piece of fruit. I just flipped over a leaf on a tree and saw this low-hanging fruit sitting right there staring me in the face. I'm going to snatch it, move to the sidelines. I'm just grabbing fruit wherever I can see it. This is when you're lifting up a raspberry bush and you pull back a leaf and see a big juicy red one sitting right there. You grab it quick because you saw the opportunity and you took it. You'll get good at that. You'll see it. It'll come to you in time. If you don't already see it, or you may not even care about it, you may go, fuck, I ain't wasting my time with that shit. That's gambling, man. It's either gambling from your perspective or it's damn right precision from mine. Whatever you want. Anyway, I'm out of here. I appreciate you guys spending time with me as usual. Thanks again. If you like it, again, hit the like button. Subscribe if you're interested. If you just want to pop in for a few more days, keep checking it out to find out if we're full of crap or not. I'm happy with that as well. You keep coming. We'll keep showing you. We got a couple more days left, and then we're taking a week off, and I'll let you guys mash around with this yourself. Try it out. Let me know how it works when I come back, how well it worked for you. If you need me to iron out any of your interpretations of the charts, say, why did this fail here? What am I missing? Screen capture it, put it on the Telegram thing there, and I'll have a look at it, and I'll help you through it if this is something you're interested in doing. If it's not, then thanks for stopping by. But until then, my friends, I will see you tomorrow, Wednesday morning at 9 o'clock sharp. Canadian time is 7 o'clock in the morning if you're out here in the mountains. And then, yeah, that's it. Thanks very much. I'll see you guys later. All the best. Anybody have any questions before I leave real quick? Great session, man. You're welcome, David. Gary Scott, thanks. Thanks for today's stream. Have a good one. Thank you, thank you, thank you. Gracias. Great session as always. Ciao, good man. Okay, no questions. All right. You guys have a lovely day, and I'll see you tomorrow.